in the intensifying House impeachment inquiry, and no one, including the president, can be sure what he is going to say. Multiple witnesses have testified that Bolton, who was ousted from the White House last month, expressed open contempt for efforts to seek politically motivated investigations from Ukraine that are now the heart of the House investigation. Republicans, meanwhile, are still standing by President Trump even after a diplomat's damaging testimony about his efforts to press Ukraine for damaging information about his political rivals. Although acting Ambassador William Taylor's explosive appearance was a major story, many congressional Republicans say they just simply haven't had a chance to read it. Some Republicans disrupted a scheduled closed-door deposition yesterday. President Trump says Turkey has informed the U.S. it will make a permanent 5-day ceasefire in Syria. In response, he says he has directed the lifting of economic sanctions at a question and answer session in Brussels. Defense Secretary Mark Esper says the U.S. withdrew troops from northern Syria when it became clear that Turkey was going to come across the border.
Our commitment to the Kurds was not to help them establish an autonomous Kurdish state and to defend them against Turkey. And that's just the cold hard facts.
Esper, meanwhile, says Turkey's operations in Syria risk the stability of that entire region. And in the race for the White House, Democratic Senator Elizabeth Warren has now edged ahead of former Vice President Joe Biden. A new Quinnipiac University poll showing her now leading all rivals outside the margin of error. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy.
Why has J.D. Power ranked Commonwealth Financial Network number one in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us number one in client support, number one in firm leadership, number one in operational support, number one in compensation, number one in professional development support, and number one in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobilely impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Introducing the Vauxhall Corsa Black Alloy Sat-Nav, sports seats, heated steering wheel and much, much more as standard edition. Or the Corsa Griffin for short. For just $169 a month and $169 initial rental while stocks last. All Griffin, no bull. Search Corsa Griffin. Available at participating retailers. Personal contract hire on Corsa Griffin 3-door 1.475 PS. Subject to status. T's and C's 18+. Initial rental 169 plus 47 months at 169. Contracted mileage 24,000. You will not own the car. Vauxhall Finance Leasing.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward account. Conditions and exclusions apply.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Can I have chemo at home?
It's only suitable for a couple of types of treatment.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
to the
it.
Sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on
Search
the right.
NBA today to start listening.
It's Liz Hernandez with your TuneIn Music News Update. Keith Urban brought in Eric Church for a duet of We Were. Keith says Eric has such a knack for storytelling and choosing images and lyrics that seem like 1,000 people must have used them before, and yet they're completely original. Meanwhile, Brett Eldridge is doing another Glow Live Christmas tour, which features songs from the deluxe edition of his Glow Live album. You can find the dates on Brett's socials. For more music from Keith Urban and Brett Eldridge, search Country Road on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash on a day when the major averages, they are now mixed. S&P 500, that's been fluctuating near its 3,000 level after approaching a record earlier. The Dow underperforming, and 3M is blamed there. The results there show that the industrial downturn continues to hobble that manufacturer. Twitter's disappointing forecast dragging down its peers, Snap and Facebook. And Tesla helping lift the NASDAQ 100 after posting a surprise profit. Microsoft also surging after sales and earnings there. They beat expectations. S&P 500 just slightly higher. I'm going to call it unchanged right now. 3,004. The Dow Jones Industrial Average 59 points lower. That's down 0.2%. 26,773. And the NASDAQ Composite Index is up 30 points. That's a rise of 0.4%. Right now, the NASDAQ is at 8150. And the 10-year yield, the benchmark in the U.S. at 174 as the price increases by 6/30 seconds. And NYMEX crude is up 38 cents a barrel at 56.34. That's up about 0.7%. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's 10:48 on Wall Street. Time to check in with Bloomberg Opinion. We're joined by Bloomberg Opinion columnist and host of Masters in Business on Bloomberg Radio, Barry Ritholtz. Barry, thanks so much for joining us. So a lot of folks are out there saying, man, we're 10 plus years into this economic cycle. The market's had a great run. We've had a great year in the market this year. What do I do? What do you say to your clients that come to you with that kind of question?
Well, we get this all the time, and one of the things we try and remind people is this isn't your normal economic cycle. This is a post-credit crisis cycle, which means it's a longer recovery, it's a slower and weaker recovery. On average, it tends to be above average in terms of equity. But by and large, comparing this to the usual recession recovery cycle, wrong data set. We've only had a handful of these massive credit-driven dislocations. Think about 1929 as another example. That's not a robust enough data set to really use as a frame of reference.
So you're basically saying, look, it's unclear what we'd even be looking at for a recession or what signs to be looking at. Meanwhile, the President Trump tweeted out about half hour ago, the Federal Reserve is derelict in its duties if it doesn't lower the rate and even ideally stimulate. Take a look around the world at our competitors. Germany and others are actually getting paid to borrow money. Fed was way too fast to raise and way too slow to cut. Do you agree?
Well, you know, ironically, the Fed chairman and the Fed vice chairman are Trump appointees, and he replaced Janet Yellen, whose term had ended as chairperson, with people who were clearly much more hawkish than her. She's a dub. And let me remind you that a few years before he was elected, he was lambasting her on Twitter that she should be ashamed as to how low rates were. So hold that aside. Can anybody honestly say the economy is lagging because rates are so high it's discouraging people from either buying capital goods or houses or otherwise investing in the economy? Rates are at historical lows. Another 0.5% isn't going to make a big difference. What there is some legitimate concern about, especially from CFOs, is on the corporate CapEx side. Corporations are reluctant to make big commitments to new plants, new hiring, new investment, not because rates at 2% are too high, but because there is so much lack of clarity as to the resolution of various policies, whether it's the tariffs and trade war, whether it's other sorts of changes to the tax code. There's so much ambiguity that companies are sitting back and waiting for clarity. They don't want to commit to one part of the world and suddenly discover that was a tremendous mistake due to new policies.
So, Barry, oftentimes people, when they're searching for quote unquote signs of the top. I'm wondering, and I've heard some people talk about, maybe some of these failed IPOs or underperforming IPOs or pooled IPOs in the case of WeWork might be a sign that, the valuations have just gotten too high and, the private public market discount has just gotten so big. And, how do you think about some of those big valuation misses we've seen in the IPO market?
So I think a lot of people are getting this exactly backwards. Go back to 98, 99, 2000, when any company without any valuation of reason, without earnings, and certainly with a minimum amount of revenues, not only would come public, they would come public and then they would increase 10x. What we're actually seeing is the marketplace working the way it's supposed to. Oh, WeWork has a terrible business model and it's wildly burning through cash, and it doesn't seem to have any sort of corporate structure that makes sense.
Please tell us how you really feel, Barry.
But this is just obvious to me. If WeWork goes public and rises 4x, if Uber comes public, and Uber's business model is quite insightful, quite brilliant, we lose a little bit of money on each ride, but we make it up in volume. If that company doesn't have a hot IPO, which it didn't, if WeWork can't get out of the gate, that's not telling me that people are wildly optimistic or irrationally exuberant, to use the phrase, but it tells me that people are rational and the marketplace is behaving the way it's supposed to. Okay. Oh, you're an expensive company with no path to profitability? Sorry, we're not interested. Go back to SoftBank. Maybe they're silly enough to give you another $8 billion.
So, Barry, you say it, you don't mince words. I love it. I do want to get your sense, though, when you do talk about your clients, I'll asking you, are we on the brink of a recession? What if we're there? I mean, not in a recession, but what if this is sort of what it may look like, albeit perhaps with a tick up in unemployment, that the riskier sectors get punished in markets and investors show increasing caution, but it's not necessarily some dramatic big bang. Does that seem feasible to you?
Sure, absolutely. So we're in the sort of I describe what we're doing today as sort of in the middle innings of the ball game. Since we're in the World Series, it's certainly not the beginning of the game. It's not the first or second inning. That's a decade ago. And to me, the data doesn't support that we're in the ninth inning. But we're in those middle to late innings where you could find a data point for whatever you want. I call this the Rorschach test economy, where you want to find a bullish data point, there's a ton. You want to find a bearish one, there's a ton. Even the econometric models that were developed so we no longer had to rely on economists' intuition, you can find one that says there's a 27% chance of recession, like the Bloomberg Economics recent recession forecasting tool. You can find one that says it's a 57%, better than even money chance, or you can find one like the New York Fed that's dead center in the middle. That sort of ambiguity just allows people to cherry pick the outcome that, the academic expression is confirms their priors.
Yes.
Meaning people look to see what they want. If you just bought stock, you're looking for confirming bullish evidence, and if you're a seller, you're looking for confirming bearish evidence. Most people suffer from that confirmation bias.
Right.
We try not to guess about it because history tells us that, as a species, we're really bad at it. A recent IMF study found of something like 400 plus economic contractions over the past 30 years. Economists forecast precisely 4 of them in advance. And in fact,
that's not a very good track record.
In the midst of those recessions, less than 25% were able to acknowledge we were in a recession. So
Barry Ritholtz, we're going to have to we're going to have to leave it there. Thank you so much. It's always fabulous having you. Barry Ritholtz is founder of Ritholtz Wealth Management, a Bloomberg Opinion columnist, as well as host of Masters in Business. This is Bloomberg.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Should we go halves?
I'll get this. Let me just get my card. Which was in my pocket.
You can't control awkward first dates. But if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
The B&Q 3-for-2 offer is now on, including an unmissable 3-for-2 on all paint, such as Dulux, Valspar and Farrow & Ball. For this show-stopping deal, hurry to B&Q. You can do it when you're 3-for-2 it. Every third item per single transaction in the send-in price order free. Offer ends November 3rd. See DIY.com.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus, month passes auto-renews unless cancelled. Terms apply.
Can I have chemo at home?
It's only suitable for a couple of types of treatment.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Do you remember picking out your engagement ring in the jeweller's window? Or choosing your first home? Or deciding the names of your children? When it comes to the important choices in life, you've always taken the greatest care. So shouldn't the same go for which firm of funeral directors you use? After all, that's an important choice too. At Dignity Funeral Directors, we're like you. We also take the greatest care. Our name is your assurance we'll be there by your side every step of the way. Just look for the sign that says Dignity. It's on all our branches and on the Dignity website. Dignity Funeral Directors, taking the greatest care.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at Treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We're broadcasting live from Witham's 7th Annual Global Summit at 2nd in New York City. Coming up, we're going to take a look at the China-U.S. trade situation. China announcing recently that it aims to buy at least $20 billion of agricultural products. Plus, we'll take a look at the global logistics business. But first, let's go to John Tucker of Bloomberg News for a Bloomberg Business Flash. John.
All right, Paul, kind of these push me, pull you themes continue for the market. We have some positive earnings, some not so positive earnings, and also fears over a slowing global economy. Of the 170 companies in the S&P 500 that have reported so far, 82% with positive earnings surprises. 3M's results, they're dragging on the Dow Jones Industrial Average. Tesla helping lift the NASDAQ 100 index today. Chip makers also jumping on a positive outlook from Lam Research. And on the policy side, Vice President Mike Pence, his next big China policy speech is set for today in Washington, D.C. S&P 500 right now is up just a point at 3,005. Dow Jones Industrial Average 64 points lower. That's down 0.2% at 26,769. And the NASDAQ Composite Index is up 38 points. That's a rise of 0.5%. We're at 81.58. Orders placed with U.S. factories for business equipment declined for a second straight month. Shipments matched the biggest drop since 2016. Now, this is the latest signs the dimmer global growth outlook and trade tensions with China have been weighing on companies. We have the 10-year yield right now at 173. The price is down by 6/32. NYMEX crude is up 11 cents a barrel at 56.07. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
John, thank you so much. Bloomberg Markets is brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Let's take a look at small and mid-cap shares, which earlier this morning had not been keeping up with larger caps. Dave Wilson, Bloomberg Stocks Editor, joining us now. What's going on there?
Well, Lisa, what you're seeing is still true. I mean, the Russell 2000 index is down 0.3%, while the S&P 500 is little changed. The Russell's steepest decline belongs to Therapeutics MD, whose ticker is TXMD. The drug developer has fallen 18% on a proposed sale of 22 million shares. That works out to about an 8% stake. Netgear, ticker NTGR, has dropped 15.5%. The networking equipment maker's revenue trailing analyst average estimate in the Bloomberg survey for the first time in more than 5 years. And Accorda Therapeutics, ticker ACOR, has lost 18% as well. The drug maker will eliminate about a quarter of its staff to cut costs and will focus on a new drug for Parkinson's disease. Now, the Russell's biggest gain belongs to On Deck Capital, ticker ONDK. The commercial finance company has climbed almost 20%. Third quarter earnings and revenue beat projections. And QEP Resources, whose name is also its ticker, QEP, is up 13%. The energy producer's latest results showed revenue beat estimates for the first time in 4 quarters. Earnings also came out ahead.
Bloomberg Stocks Editor Dave Wilson, thank you so much. Trade still on the front burner. We now have some news that China aims to buy at least $20 billion of agricultural products in a year if it signs a partial trade deal with the United States. Let's get the latest with Sean Donnan, senior trade reporter for Bloomberg News. He's based in our D.C. bureau. Sean, thanks so much for joining us. What's the latest here on this ever-changing U.S.-China trade dispute?
Well, we've got a couple of events just unfolding. Vice President Mike Pence is about to get up at the Wilson Center here in Washington and give a speech on U.S.-China relations. When he gave a similar speech a year or so ago, it became the trigger for a lot of talk of a new Cold War looming. He really used some language that harkened back to the 80s and the kind of Iron Curtain days. And the Chinese certainly noticed, and that helps our relations then as we march towards what the president has called a substantial phase one deal that might be signed in the middle of next month down in Chile at the APEC summit there. The Chinese are watching the administration like hawks to try and figure out how many hawks are left in the administration and whether they're going to cause any mischief. So that's the first event. Tomorrow, we're expecting Robert Lighthizer, the U.S. Trade Representative, Secretary of the Treasury Stephen Mnuchin, and their Chinese counterparts to get on the phone to continue the process of trying to get this deal down on paper. As administration officials have acknowledged, there's nothing on paper yet, and we really need to get something done quickly. And hanging over all of this are some big questions still over how good a deal this is, and that gets at this question of Chinese agricultural purchases. What we're hearing from our sources in Beijing is that the Chinese have agreed to do something like $20 billion in purchases in year one of a deal, ramp that up to the $40 or $50 billion that President Trump has touted, but only in the second year of a deal. And this is important, and that is conditional, they say, on further talks going well. And in the background of all that is their request to see the U.S. roll back tariffs. So, look, we've got a fragile deal here, and day by day, there are all sorts of things that could upend this.
You know, it's interesting, Paul, when you introed Sean, you said this ever-changing China-U.S. trade deal. It's ever-changing and not changing at all. I mean, it seems like all of these details are just turning into a drone that people are dismissing and saying this is just going to drag on like this, piecemeal, with no sort of big denouement one way or another for the foreseeable future. Is there anything that you're seeing that challenges that sort of perception out there right now?
No, look, I think that's absolutely right. I think also lost in all of these daily developments is the real broad context. I mean, the $20 billion in agricultural purchases that we're talking about is exactly where China was. In fact, I think they did $21 billion in 2017, the year before the tariffs went into place. We've had a lot of chaos in markets. We've had some clear economic damage. These trade wars, it's not clear what we've gotten out of them right now, and that's going to be a big question going into next year and the election. And it's something that we really need to keep in mind. You know, I feel like every week I get up on Monday morning and we're in a slightly worse place than we were the Monday before in terms of U.S.-China economic relations, and that remains the case. And that's the bigger context, and that's what matters here in some ways, rather than these kind of daily details.
So, Sean, just quickly, is there any sense in China that there's support for a phase one type of deal, or do they want something broader?
I think the Chinese want what the Trump administration seems to want right now, and that is just to hit the pause button on these trade wars, to kind of give a chance for everyone to kind of consolidate, get rid of some of the uncertainty.
So why is it so hard?
And some of the mess, but you know that's the easy part, and that's the point. It's easy to hit the pause button, and we have this kind of deal of convenience in some ways that we're seeing develop here, because both sides really just want to hit that pause button. But that bigger deal, that longer term agreement between the China is going to be really, really, really hard to get. And I think the Chinese recognize that. And they also recognize, if you talk to Chinese officials, that the relationship between the U.S. and China has been getting steadily worse. And it's not likely to get any better when you get a new person in the White House. This is not just a Donald Trump thing.
Sean Donnan, thank you so much for joining us and for taking the time. Your columns are always wonderful to read. A fantastic reporter, Sean Donnan, senior trade reporter for Bloomberg News, joining us from our 1 Studios in Washington, D.C. The more things change, the more they stay the same with respect to U.S.-China relations, although he said it did seem to be deteriorating. Right now, let's head to our 99.1 Studios in Washington, D.C. Amy Morris there with World and National Headlines. Amy.
All right, thank you, Lisa. In the race for the White House, Democratic Senator Elizabeth Warren has edged ahead of Joe Biden. A new Quinnipiac University poll showing her leading all rivals now outside the margin of error. House Democrats are preparing to move their largely private impeachment inquiry into the public eye as early as mid-November. Among the witnesses Democrats hope to question in open session are the acting ambassador to Ukraine, Bill Taylor, and his predecessor, Marie Yovanovitch. And the U.S., meanwhile, has been closely monitoring the scene in northern Syria. Bloomberg's Bob Moon with that story.
As the president lifts sanctions on Turkey, his own special envoy for Syria, James Jeffrey, tells Congress Turkey's incursion is a tragedy and that Ankara-backed forces are likely behind several war crimes.
We haven't seen any widespread ethnic cleansing in that area since the Turks have come in. Many people fled because they're very concerned about these Turkish-supported Syrian opposition forces, as are we. We've seen several incidents which we consider war crimes.
President Trump says he's open to meeting with President Erdogan, and that could happen in the very near future. Bob Moon, Bloomberg Radio.
And Defense Secretary Mark Esper is lashing out at Turkey for its military assault. Esper says Turkey's unwarranted invasion into Syria jeopardizes security gains made against Islamic State. Public health officials fear their warnings about the dangers of vaping could send smokers back to cigarettes. A mysterious lung disease tied to vaping has stricken almost 1,500 people across the U.S. and killed 33 people. The CDC has struggled to identify the precise cause and has not yet blamed a single product or type of device. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Full breakfast, cup of coffee, whatever you have in the morning, have it at daybreak.
What's the outlook for the pound if there is another election?
Nathan Hager.
The U.S. could still delay those tariffs?
And Karen Moscow.
It is the fifth major industry player to make some sort of zero commission offer.
Bloomberg Daybreak.
Bloomberg has more from Hong Kong.
Weekdays at 5 a.m. Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to the Dog Show. Up next, we have Satchmo. Satchmo is a member of the Shelter Pet Group.
That's right, a group known especially for their couch-snuggling, ball-chasing, face-licking, and, of course, companionship. Now, let's see him in action.
Look how he makes eye contact with his person.
That's actually known as the treat stare.
How intuitive. And now he appears to be excitedly turning in circles.
The happy dance so common with this group.
But really, the best way to know an amazing shelter pet like Satchmo is to meet one.
Visit theshelterpetproject.org today. Adopt.
Brought to you by Maddie's Fund, the Humane Society of the United States, and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
If you love them enough to listen to them practice the same song on tuba,
please be done.
Over and over and over and over and over, then surely you'll check NHTSA.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at NHTSA.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending. Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Swinging a line drive, base hit into right field. Way back goes this one. It's got a chance. It's going, and long gone up onto the railroad tracks. Welcome to the World Series.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues this Friday with Game 3 between the American League champion Houston Astros and NL champion Washington Nationals. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium.
It's Liz Hernandez with a wordful moment, giving meaning to the day with one word: vulnerable. Being vulnerable has taught me two things. I might feel extreme pleasure for being open, or I may feel intense pain. And if that pain comes, I get to grow. My heart knows things that my mind can't understand, so I have to honor it, even if that means getting my heart broken. Some may see being vulnerable as being weak. I see it as one of my greatest strengths. We've given the day meaning. Search wellness on TuneIn and explore more today. It's Liz Hernandez with your TuneIn Music News Update. Keith Urban brought in Eric Church for a duet of We Were. Keith says Eric has such a knack for storytelling and choosing images and lyrics that seem like 1,000 people must have used them before, and yet they're completely original. Meanwhile, Brett Eldridge is doing another Glow Live Christmas tour, which features songs from the deluxe edition of his Glow Live album. You can find the dates on Brett's socials. For more music from Keith Urban and Brett Eldridge, search Country Roads on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Don't skip the start of the NBA season because you're out of the habit. Set a reminder with TuneIn. Make sure notifications are allowed on your phone and search for your team in the TuneIn app. Then, just find the game you want to hear and tap Notify Me. We'll let you know when tip-off is about to happen.
It's Liz Hernandez with your TuneIn Music News Update. Nick Jonas tells Rolling Stone magazine that the big reason the brothers broke up in 2013 was because of the music. Nick says, "We were making music that I don't think we were all super proud of, and we should go on our individual journeys." Meanwhile, Billie Eilish doesn't care for people who wear mink. She tweeted, "Just so you know, you people getting mink lashes and mink slippers disgust me, LOL." To hear music from the Jonas Brothers and Billie Eilish, search today's hits on TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when the major averages, they are mixed. Traders still looking at a raft of corporate earnings. At the same time, the global economic slowdown, we have treasuries rising in price as the yields slightly lower. S&P 500 has been fluctuating right around the 3,000 mark. Right now it's up 3 points. That's up 0.1%. We're at 3,007. The Dow underperforming, being dragged in part by 3M's results. They show the industrial slowdown continues to hobble the manufacturer. And Twitter, disappointing forecast, dragging down some of its peers, including Facebook and Snap. The Dow Jones Industrial Average 57 points lower. That's down 0.2%. We're at 26,776. The Nasdaq Composite Index is up 46 points. That's up 0.6% at 81.65. 10-year yield in the U.S. is at 173. And we have oil. It is higher. NYMEX crude is up 19 cents a barrel at 56.16. Spot gold down $10 an ounce, right around 15.0216. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are broadcasting live from Witham's 7th Annual Global Summit in New York City. A big topic of discussion is logistics and how technology is transforming the way that goods move around the world. Joining us now, Michael Kaminsky, Chief Operating Officer at HMTX Industries, which is a global LVT manufacturer. I had to look up what LVT was.
I was going to ask Michael what that is.
It's luxury vinyl tile, because I actually Googled it. Luxury vinyl tile. Look, it's so that you can look at the different layers here. So, Michael, from a moving things around perspective, how crucial is that to what you do every day?
Well, it's the essence of what I do every day. We sell over $700 million of product, LVT. Most of it's manufactured. 95% of it is manufactured in China, and we sell it throughout the world, although about 80+% is sold in the United States. So getting those goods from China into the United States and then out into the distribution centers, then into the local community, and then ultimately to customers' homes is all about logistics.
So as we've been talking a little bit about this China trade thing here and tariffs and all that kind of thing, and it's been the talk of the markets really for the last 6 months or so. How has tariffs impacted your business?
Well, it's a significant issue. It takes up a huge amount of my time and senior executive of the company time. The tariffs on our products, 10% tariffs started on September 24th, 2018. There were threats to go up to 25% that kept on happening, and actually in June did rise to 25%. So that's an enormous amount of money placed on our goods. It's the topic.
Who bears the cost of that? Do you pass that along to your customers, or do you, as a company, eat it, or is it a little bit of both?
Well, there's a certain gentleman who thinks the Chinese are paying for it. He's wrong.
Right.
The costs are paid by a variety of different people in the global supply chain. First and foremost, we've renegotiated prices with our factories. We have eaten a percentage of the higher costs. We've passed on a percentage of those costs to our customers, and then our customers have passed on a percentage of those costs to the consumers. So the truth of the matter is it's borne by many different people, and it hurts many different people throughout the chain.
Some people have said, well, just change the supply chain. And when you talk about the factories and sort of replacing them, et cetera, there's an issue with that. But logistically, how challenging would it be to completely rejigger the supply chain?
I mean, simply put, it couldn't be done. The investment in the factories, our manufacturing partners in Asia have invested tens and tens of millions of dollars into their facilities. In fact, over $100 million in certain instances. You just can't replicate that first from a cost point of view. In fact, one of our biggest competitors over the last few years has invested almost $1 billion to create a manufacturing facility in the United States that would be capable of producing the product that we make. And they've been unsuccessful. It's not a simple product to make. And second of all, who would invest that kind of money unless you felt that you could make a good product and get a good return on it? So our supply chain is embedded, and it starts with our manufacturing facilities in China, and then across the board, each element of it has to react to it. You just can't pick up a factory and move it and start afresh.
What's your primary, transportation method or route of bringing the product from China to the U.S.? You just slap it on those big monster container ships and it goes to Long Beach or something like that?
Yes.
Okay.
So we ship approximately 2,000 containers a month. Almost all of that comes out of the Shanghai port. Starts actually, our manufacturing partners are in Zhangjiagang, China, which is up the Yellow Yangtze River, a few hours from Shanghai. So they go from the manufacturing facility in Zhangjiagang on river boats down to the port of China, which is Shanghai, which is by far the largest port in the world. 2,000 containers a month get put on those very, very large boats that you see out there. Some of them go to the port of Long Beach and Los Angeles. Some come through the Panama Canal and go to the port of Savannah, which is actually the third largest port for these kinds of containers in the country. And then we have distribution facilities in Compton, California, in Rankin, Georgia, which is a little bit outside of Savannah. And from there, we then ship them throughout the United States.
Just quickly here, I'm wondering whether there are new technologies that would facilitate some of the logistics around this that you're hesitant to invest in right now due to the uncertainties.
Well, it's very, very hard in this uncertain environment to make long-term strategic decisions. We happen to be very lucky in the fact that we have a product that the consumer is clamoring for. And so we are selling, even in the face of these tariffs, we're doing very, very well. So we're not going to stop investing in our businesses because of the uncertainty, but it makes it more difficult. We've invested, 2 years ago, we opened a new facility outside of Savannah, invested $11 million in robotics and in a new facility. So we're doing that all the time.
Understood. Michael Kaminsky, thanks so much for joining us. We appreciate you stopping by here. Michael's the COO of HMTX Industries, joining us here at the Witham 7th Annual Global Summit at 2nd in New York City. Very interesting logistic discussion.
And really important to get that view in terms of on the ground, how realistic it is to shift around your entire supply chain.
Exactly. Not very easy. This is Bloomberg.
This is a Bloomberg Market Minute. Investors are focused on the flurry of earnings crossing today. The S&P little change with the Dow falling, weighed down by 3M. The maker of Post-it notes slashed its profit and sales outlook, saying the macroeconomic environment remains challenging. Tesla, on the other hand, soaring in trading. The electric car maker's third quarter earnings beat estimates by a wide margin. Plus, Tesla's new factory in China is already starting production. The Model Y crossover will launch months earlier than expected next year, and the long languishing energy business is showing signs of life. Target is increasing its holiday payroll by $50 million this year to make sure all locations have enough workers available to help customers. And the economy has added millions of jobs, and pay gains have accelerated in recent years. But Americans aren't crazy about their work. A Gallup poll showed just 40% of employed Americans say they're in good jobs versus 44% in mediocre jobs and 16% in bad ones. Courtney Donahoe, Bloomberg Radio.
I'm a 40-year-old man that walked in there to get his high school diploma. It was very hard for me, but Miss Araceli, she gave me direction.
At age 47, Marco finished his high school diploma.
50% of getting your high school diploma is walking through those doors. The other 50% is doing the work.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening.
What if your email was organized by project and not by date? What if everyone looked at the same thing instead of their own inbox? Then it wouldn't be email at all. Forget your fragmented, jumbled inbox and make the change to channels in Slack. Spaces dedicated to individual projects, topics, or teams. All your communication is neatly organized and everyone is on the same page. Slack. Choose a better way to work. Get started at slack.com.
I tell you what used to be fair, lunch. You used to walk past pubs and just see people laughing and merriment. What happened to those cheery days? I tell you what happened to them. It's been replaced by a pint glass sitting by a computer full of condiments, plastic cutlery, and a pair of chopsticks you use for fishing the noodles out your keyboard. It's just not fair.
At TalkTalk, fairness is important. That's why, unlike some other providers, we offer fixed price plans on our fibre broadband for the entire length of your contract. Search TalkTalk Fibre. Fairer broadband for everyone.
We've been together 3 years. We both love travel, and luckily we've got the same taste in music. Next year, we're planning a big road trip, and my wife's coming too. It'll be nice. The three of us don't do enough together. We know how much your Mini means to you. That's why Mini Service offers an array of convenient options and allows you to book online anytime at mini.co.uk. Because we love your Mini almost as much as you do. Search Mini Service. Who's in? T's and C's apply, subject to availability, participating retailers only.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto-renews unless cancelled. Terms apply.
There's It's a Thursday Afternoon happy. Listening to a banger happy. There's no traffic on the M1 happy. The girls' night out is this weekend happy. There's only 62 days until Christmas happy. It's almost home time happy. Got a free brake check happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica. Sip margaritas in Mexico. Or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we'll take a look at what happened at Twitter with the shares of that company plunging. We're also going to be talking about Amazon expecting the results after the bell. Plus, we'll take a look at what kind of financial environment we are in through the eyes of business CEOs. Right now, though, let's head over to our own John Tucker for a Bloomberg Business Flash. John.
All right, hey, Lisa, we have the S&P 500 inching its way toward a record right now, up about 7 points. That's a rise of 0.2%. The broader index at 3,011. Different story for the Dow right now. That's underperforming, being dragged on by 3M's results. That shows the industrial downturn continues to hobble the manufacturer we used to know as Minnesota Mining and Manufacturing. Twitter is disappointing forecast, dragging down Pierce, Facebook, as well as Snap. You know, the S&P 500 up 20% year-to-date. Despite that, Kate Moore at BlackRock Financial says there are plenty of jittery nerves among investors.
I think the anxiety level and the fear that something could really reverse the market is much higher than it has been in any post-crisis period.
Well, she still says investors should hang on to risk assets because some positive developments in the global economy have yet to be priced in. We have the NASDAQ Composite Index right now 60 points higher. That's up 0.75%. 8180 right now, the tech-heavy NASDAQ. 10-year yield in the U.S. 174. And NYMEX crude is up 23 cents a barrel at 56.20. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, Twitter reported results last night, and the market did not like those results. The stock is trading off about 19% today. Stock is around $31 a share. To get the latest on what happened there, also make a little preview of Amazon. We welcome our good friend Jitendra Warral. He's a senior internet analyst for Bloomberg Intelligence. He joins us from our San Francisco studio. Jitendra, thank you so much for joining us. First, give us a sense of what happened at Twitter. They were on a little bit of a run there. It looked like they were turning things around. What happened?
Yeah, you're right. It was a disappointing quarter. Twitter has just walked a few steps back in its recovery story here. I mean, first it was a quarter with a lot of bugs in their mobile app promotions product that's sort of like impacting the ad targeting aspect and hence the revenue that's coming from that product. But the bigger concern here was the seasonality that they were experiencing 2 months in the quarter. And it's interesting, the seasonality was around events. So basically, if there are a lot of events happening, there's content flowing around it, there are product launches happening, your revenues go up. But if that doesn't happen, then suddenly you see a lull that's happening. And this is a problem in terms of long-term growth visibility, because if they're not able to maintain a steady stream of advertisers, then it becomes difficult to see how they can continue to grow double-digit for years to come.
So I'm struggling to understand why they're having difficulties with advertisers, given the fact that their user base continued to show pretty strong growth, which actually had been a question for the company a while back.
Yeah, that's a good question. And they continue to show progress on the user growth. But what happens is with Twitter, they're going after these bigger brand advertisers. Self-serve is a very small portion of the business, not like Facebook or Google or even Snap for that matter. So, the sales force has to drive these advertising dollars. And sometimes because these advertising dollars sort of budgets flow against a given event or a series of events or a product launch, they tend to keep on seeking new advertisers, if you may, versus having a self-service engine running like Facebook is. And that's why you see this lumpiness, and this lumpiness is what worries us the most.
But there was also a problem with some bugs that it talked about. What was the issue there?
So the issue there was basically the ad targeting of the mobile app promotions product, which is basically mobile app install ads and things like that. These are higher priced ads.
The next bus is 18 minutes away.
Look, there's a cab.
We really shouldn't.
Taxi!
I mean, we ate out last night.
Just get in. We're getting soaked.
You're such a bad influence.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Be another one of those verticals that we talk about. When we talk about names like Apple and other names, Scott, we always talk about what are some of their areas where they're going to generate some great revenues. This was a 25% jump. The growth that they've got out of LinkedIn in terms of revenue has been absolutely spectacular. They're slipping a little bit in gaming, but the overall story is everybody's looking at Azure and they want to see, okay, 64% to 59%. Well, if you look over at Amazon, you look at AWS, that has slipped back down. That's around 37% growth. So they're still growing. Yes, it's decelerating, but I think you'd expect that to decelerate a little bit, and I think it'll continue to do so. But that doesn't mean that they're not winning right now as they go head-to-head with Amazon.
Can you answer the question I asked at the top, Joe? I mean, it's a fair question to ask. Is Microsoft the best large-cap tech stock to own right now?
Oh, so 2 minutes into the show, you're going to give me a hard time about my answer, because my answer would be this. If you're a portfolio manager and you identify, here's my choices for technology stocks. Amazon, that's consumer discretionary. Take it out of the conversation. Facebook, Alphabet, that is the communication services. Take that out. So I'm down to Apple and Microsoft. So you're asking me to choose between
don't have to choose. Just
Apple
say, you know
and
what,
Microsoft.
Scott?
So it's
one of them.
So it's Belichick.
It's definitely one of them.
It's Belichick and Brady. Those two distinctively in technology stand out above so many others. Now, I will say this. The defensive quality about Microsoft is becoming more and more evident. So if we are late cycle, and who knows economically if we're at that point, but if we're going to see CapEx and spending and technology begin to retreat, I feel really good about being long Microsoft because I think that's the one equity name that is so defensive that you'll see less selling pressure. You might see a little bit more in Apple.
What's amazing is how the narrative around the story has changed. The stock had a run into the number. Revenue guide was a little light, but the narrative today is they're being conservative. Not that there's a slowdown with their revenue growth.
But I bought more Microsoft today because if you look at the earnings report, you think about how we talked about how long everyone was going in, and to see the stock here up over 2%, I think that's an exceptional performance.
The risk was to the downside on this, just given the move, don't you think, Steve?
Without a doubt, the risk was to the downside. So it was trading right below its all-time high. But when you handicap the risk, you've got a CEO who's continued to execute, has done a great job of guiding the street to his numbers. I thought it was a pretty low risk. To me, it is the stock tone. Brady and Belichick are in different positions, so of course you get on them both. So I would have said Brady.
Yeah, a coach and a coach, or a quarterback and a quarterback. That makes more sense, actually.
We won't go to you for sports analogies.
No,
I think it is the one to own because it's got the subscription base and they continue to innovate. LinkedIn is just an animal. I mean,
and remember all the criticism he got for that acquisition. Yes. So much money that he paid, he overpaid. What's it going to do?
Right? They haven't had to talk about it. Yeah. So I like it because I do believe, as Joe does, that it's defensive as you can get here. To me, the only issues are with the stock price, not with the fundamentals. Not who's the marginal buyer now, because everybody seems to own it. Everybody has owned it, number one. And then something they can't control as well, which is the market itself, which I believe is in trading range. But for that, you'd see a stock that was up a lot more than today.
So, Megan, you got Wedbush going to 170 on the price target. That looks to be maybe the high on the street. On the cloud strength, you have others raising the price target across the board. Do you own it? Everybody else owns it, do you?
So from a sector perspective, I mean, we're neutral to technology. We've liked software for a while now. And I think that to Steve's point, though, it's been a go-to stock for the market, a darling, particularly with the trade tensions. And so at this point, while we still like the cloud story, cloud spending is anticipated to increase 3 times that of overall IT spending between now and 2022. So that's a good thing for the cloud story of Microsoft. But valuation and overcrowding is a risk at this point. So you have to be thinking about whether it might be time to trim a little bit out of the software and maybe start to tiptoe into semis as you kind of get that bottoming.
There's good reason, John, why Kramer says you got to put Microsoft into the FANG group and FAMG.
Yes.
And get Netflix out.
He's right.
And
he's
Microsoft belongs there now.
Well, Azure, the growth there was 59%, 63% in constant currency. I mean, so it's one of the few times I'm going to disagree with Megan. You got to load up on this one, Scott. I mean, the diversification they've got, the fact that operating margins are 38% versus 34 year over year. Who else is doing that? Where can you get that? I mean, when you look at the guidance for the next quarter, I saw Intelligent Cloud is going to be between $11.25 billion and almost $11.5 billion. That's the diversification, Scott, because what did they used to be? Operating systems, right? That and, as far as Word and Excel and all that, everybody said Google's going to kill them. They're giving it away. Well, that's still a $12 billion revenue number quarter after quarter after quarter for them. And again, it's reoccurring revenue rather than just a one-time fee that you bought it. So, like I say, one of the few times I'm going to disagree with Megan, but I love this stuff.
It's such a specious argument. Talk about slowdown in the cloud. It's the law of large numbers. You can't continue to grow that fast when your business is that big.
No slouch anyway, in terms of the number that they're looking for the growth. Is it fair to say that Nadella is now one of the best CEOs that not enough people talk about? I mean,
aside from Pete?
I know Pete mentions his name, but it's not like
to the point where he gets mad at me for mentioning his name.
He's talked about in the same realm as some of these other CEOs.
Because he made the transformation of a company. And those are the guys who deserve to be talked about. We bring up Brian Cornell. Why? Not just because Target stock has gone up, but because of the fact that he took a company that was broken and fixed it and made it even better, Scott, and then enhanced what they were doing with the $7 billion they put into redoing all the stores and then shipped that buy of $500 million. Can you imagine? So when you look at that and you look what Satya Nadella has done since he's taken over, we look at so many companies that they cannot make that turn. Right? So you look for the CEOs who can make that turn. That's why Nadella is so special. That was a turn that stock was trading, give or take, call it $40 a share when he started this whole process and said, look, we're going to the cloud because that's where the growth is.
Think about the cultural change he had to manage. And to me, that is the ultimate test of a CEO. That he took a culture that was very staid at Microsoft, that I would say was even somewhat tired, wasn't innovating, right, and just turned it around without massive disruption. From the day he got there, it's been straight up. So yes, I think he's one of the top CEOs, so not only in tech but in the.
So let's do this. Let's look ahead then to Amazon and Intel, shall we? What do we want to say about those after the bell? As we try and spin this story on tech forward.
Well, yesterday, I talked about Micron in terms of we look at different tech, right, going on right now, and also the semis in different ways. I think Intel actually has a chance to put up a pretty good quarter. Now, in terms of Amazon, that's just the difficulty that they have to prove to everybody that AWS is not losing right now to Microsoft. If they can put up some strong numbers on the AWS side, Scott, that's going to be the important part. E-commerce, we know they own it, but it's all about AWS and what are they doing there, because that's the margin, that's where they're making the money.
So the word margin was just used, and if you look at Microsoft's report, that was what was so impressive. Increasing spending, but yet margins rising. Can Amazon do that? Can they follow that formula? We will see. I also think it's important for Amazon in terms of a price performance to finally come out and be up 3 to 5% after whatever this report might be, because that would be uniquely different than it's been for the last 4 quarters.
I've got concerns about both. Intel, because of what we saw in Texas Instruments, so they are more like them with some of their businesses, not a dominant part of the business like Texas Instruments, but I have concerns about that. In terms of Amazon, it's just not been acting well. It's been hanging there. So I would take Jim's comments one step further. I don't think the FANG really exists anymore. People coined it the FANG because they were leading the market higher. They were moving. But we've had Amazon and Alphabet that have been stuck in neutral, right? And Facebook has its own issues. So I would go to a new acronym, which I can't give you right now off the top of my head, but Microsoft would definitely be in there.
You mean you have to think about, you don't have the new one, you need to think about it?
I don't want to dazzle you with some quick thoughts. I don't want to lose you in the trap.
Yeah, obviously you don't have it. Obviously you don't, he doesn't have the goods. Intel's got some catch up to do too, right? 10% year to date relative to some other names in the chip space. Chips have been a really good trade. Not
Chip
Intel.
Equipment names, Lam Research.
Not Intel.
Lam Research, the report last night was incredible. Obviously, memory, which is important.
Well, I'm just saying, like Micron, NVIDIA, AMD,
The SMH has been great.
I wouldn't buy the
Intel's running behind the
Of course
group.
you wouldn't, because you sold it lower, and I understand it. And that wasn't a bad play when you got it. You made a lot of money and you got out. I still think it's got upside, though.
I think the upside's on the equipment names.
Okay. What about, give me the best equipment name right now.
Lam Research.
Okay. Well, we're going to talk about that later. So you'll tell me why later. Twitter. Ouch.
Yeah.
Brutal. Weiss, you own it.
I do. So I'd sold most of it. I said it on another show, sorry, Scott, yesterday, that I'd sold most of it.
The reason being,
the reason being, the reason being is that as you go on the site, you just didn't see the advertising there. And it just wasn't there. If
you sold it into the number or after the number?
No, I still have a very, very small part. I sold it yesterday morning before the number. The stock was also giving a tell, just wasn't acting well. It wasn't participating at all. The snap numbers really had nothing to do with my selling it, because it was just a different demographic they go to. But look, stocks sometimes tell you something. And the terrible trading activity in it was so consistent that I just got concerned, and I spent a lot of time going on the site to check their advertising levels. They just weren't there. So look, this is one that...
They say there was a bug. They blamed it on themselves, a bug in the ad product that took a few points off
it's not a year-old
their
company.
growth.
It's not that doesn't give me confidence, right? And then they also talk about seasonality. Guess what? Seasonality happens every year. It's the same seasonality. So how do you ever... I never understand.
What if advertisers are souring a bit about the mud pit?
And you'd have to be, wouldn't you?
I mean, I'm being nice.
No, I hear you. You cleaned it up. Yes. Yep, you are correct.
I was going to say something else.
To your point about that bug or whatever it is that's affecting, this is something that needs to be addressed, like when that happens, Scott. They're saying it's still going to extend into this next quarter, perhaps even beyond that. I don't understand how that could, how Jack could put up with that. How do you do that when this is your lifeblood? That's all they have. And the fact that Instagram's killing them, the fact that certain analysts today are saying, boy, snap over Twitter right now as far as ads, because you're just not getting what you're paying for with Twitter. And then you mentioned the mud pit, which is also pretty accurate. I'd say, I'm not saying it's a don't touch. I'm saying they're not doing anything right now. Nothing is about this report.
I want to give Josh is not on the show, obviously, but we got a comment from him because he's been the biggest supporter of the stock, I think, on the show. That's fair to say. Said the quarter doesn't change his opinion about the long-term value of the platform. They're trying to clean it up, but this is short-term earnings negative. So I guess he's willing to deal with some pain in the short term for some long-term gain.
I think the only thing to consider is, and I've said this in the past 6 months, what if there's social media exhaustion? And I think potentially that could be the case. You're beginning to see some of the evidence with it, both with Facebook and with Twitter. The content that is being provided right now on Twitter, are we as energetic about absorbing that content as we were a year prior? So everyone keeps talking about, well, in 2020, the election will play out on Twitter. I don't know if overall we are really gravitating to get that information. It seems like we want less of it. I'll use the president as an example, okay? The president aggressively tweets on a daily basis. I don't know if his tweets are being viewed as much today as they were being viewed 6 months ago, because I do think there's a degree of exhaustion.
I'll take the other side of that real quick. And the reason I will is I'm hearing all the negativity that's being thrown at it right now. The stock's up 35+% going into this number. Now all of a sudden it's pulling back, call it 20% today, right? Ad revenue,
stock's $5 above
ad
its IPO
revenue,
price.
right? Ad revenue was up 8%. So they missed expectations, but that doesn't mean that they're not still growing. And to Joe's point, he's talking about, well, I still see this. The president tweets, people view it. They are viewing it. Now, the matter of whether or not he's still moving markets is a different story. But whether they're viewing it, I'd say they absolutely are. I think we're seeing some of the growth that's there. And that growth, I think, this is an opportunity, in my opinion. This sell-off that creates an opportunity.
Maybe people view the discourse, if you want to call it that, on Twitter. Again,
there's a lot of negativity, and I understand.
I would otherwise
I'm with you. I see it all, and there's a lot of trash on there. But people are addicted to that.
Well, and the other issue, though, is data privacy. So as I understand understood it, this ad bug was related to consumers not, Twitter not respecting what the consumer had selected in terms of their data privacy. And it seemed like they tried to rectify it and stop that issue, immediately. Whether it'll have spillover effects in terms of ad revenue is another issue. But this is front and center for policymakers.
All that matters is whether you look at the stock today, down 19%.
Yep.
Do you buy it today?
I'm looking at it, but I don't usually try to buy on day one. So give it a couple of days, and then I'll be staring at this stock and wanting to buy it. Because, Scott, there's a lot of different areas when they reported that were pretty... The DAUs, you look at those up 17% year over year. There are numbers.
How do we know if they're still...
Well, we've never really known a lot. I mean, I get it, but I mean, I'm going off the numbers. Now, I did not like this name when it was up there, obviously, where it was. That's why I didn't own it. But now that it's pulled back and it's taken off a lot of what it had gained this year, I still think that does create an opportunity.
All right, let's turn to the broader market. Our next guest joining us at the table and saying we're not at the top of the market, and earnings may be part of the reason why he thinks that. Dan Greenhouse is chief strategist at Solus Alternative Asset Management, firm with $5 billion under management. Welcome back.
Thank you.
How long has it been since you've been on the network?
It's been a few years.
What?
Good to see you again.
You got younger, though. We should all be so lucky. Yeah.
It is good to get you. Good to have
Thank
you
for
back.
having me back.
Earnings, is it part of the reason why you think we have some upside to go? They're not as bad as feared.
Listen, there's obviously a lot about which we all worry every day. The environment is as cloudy as it's been any time in the last 10 years. But I really think you need to think about the investment landscape built on 4 pillars, let's call it. First, the equity market, defined by the S&P 500, has effectively gone nowhere for the better part of a year and a half, call it. Obviously, there's been sector rotation underneath, but as a headline, that's been the case. And that's not really a topping pattern. That's generally a bottoming pattern. That's part one. Part two is earnings growth. Obviously, it's not good right now, but the base effect, which works against you right now, is going to start to work in your favor next year. Number 3, you have the Federal Reserve, which began cutting rates over the summer. As any economist will tell you, monetary policy operates with long and variable lags. So by the time you get into next year, you start having a little bit of a tailwind from that. And then 4th, you have what we'll call the wild cards. Maybe you get a trade deal, Brexit works in your favor, and some of those macro headwinds start to fade. And so based on those 4 things, if they start working in your favor, and I think they will, then the bias in that type of environment is still to the upside.
How do you think about, okay, maybe the Fed pauses, maybe there's, false optimism out of trade, it doesn't come to fruition the way people think, earnings don't recover meaningfully enough to carry the stock market higher, there's still slowing global growth to hold down the overall story?
Yeah, listen, we can shoot holes in that, and I can take the other side of it, but when you listen to what companies are saying right now, Thermo Fisher, 7% organic revenue growth. Procter & Gamble, same thing, both guided higher for next year. Costco, membership numbers are doing quite well. The home builders, Lennar and Pulte, talked about how the decline in interest rates is helping boost home ownership.
Sure. I could say Caterpillar's on the other side of that.
And then,
some other names too.
Texas Instruments and Textron and the like didn't do well. But I think to the point about maybe earnings aren't going to be as strong, that's right. I think bottom-up consensus is somewhere around 10%. I sell that all day. You'd probably be closer to 4 or 5%. If the Fed pauses, it's because things are doing okay, and that's ultimately going to be good for stocks. And while you can shoot holes in any argument one way or the other, to me, when you look at the totality of the evidence, so to speak, I don't know why we're on the verge of a recession such that you have a meaningful and sustained drop in stock prices.
Who wants it?
Asset prices.
Yeah, I mean, I think it's tough. We think that we're still at a crossroads. I'm not, confident enough to say that we are definitively, heading higher. We think it's still kind of in this muddle through where we could inflect, frankly, in either direction. And I think trade remains a big part of that, even though we don't want that to be the case. And we are kind of, marginally getting more optimistic on that front. But at the end of the day, there's still that unpredictability. We're watching 3 things: stabilization of global data, which that we're not really there yet. It's a little bit more mixed. We might be finding a bottom, but I think it's still too early to say that. Resilience of the U.S. consumer. Again, some perhaps cracks there, but, for the most part, a strong consumer.
Some of these stocks that have done well, right? The home builder trade, which we're going to talk about a little bit later.
And then the other thing is the economic uncertainty. We are basically at peak economic uncertainty. Whether we continue in that, with a re-escalation of global trade tensions, that would, I think, reset us lower. sure. But if we can continue and get this phase one and kind of move in the other direction, remove some of these tariffs, I think you could be looking at another kind of mini cycle and a recovery that has some legs to it.
Yeah, I mean, the one pushback I would have, and I agree with the ending argument there, is the peak economic uncertainty. We had that in 29 when Greece said they lied about their debt, in 2010 when Spain was downgraded, in 2011 when the U.S. was downgraded, in 2012 we had the fiscal cliff. There's a perpetual series of headlines about which we can worry. And while obviously this one is to some degree more meaningful or more concrete than some of the others, I would argue it's probably no less different. And ultimately, if we do get a resolution, and that's a big if, then ultimately those other, the better earnings growth and the better economic environment will come to play out, and stock prices should.
So the only
should
difference there, I think, is that we do have global economic uncertainty, whether you want to look at an economic policy uncertainty index or what have you, that is meaningfully higher than where we were at that time. The other thing that's concerning is CEO confidence.
Sure.
We talk about it a lot in terms of what that does to CapEx and kind of the input to GDP. The other thing to think about is what that does to the buyback environment, which you might expect it to slow anyway heading into an election, and then you're kind of compounding this trade stuff on top of it. That's the more bearish argument. But as I said, I think that, we're neutral to equities at this point. We think we just need to be patient.
Dan, is there a political risk? I mean, we always talk about this time is different, and it seems as though the conversation around the 2020 election has that premise that this time could be different. Is there the political risk for equities and asset prices?
Listen, there's no doubt, and I want to make clear right now, I'm making no comment about politics, but clearly you would be asleep if you weren't paying attention now and thought politics was a risk. But ultimately, I think presidents in general, senates in general, often get way too much credit about the path for the economy. We can certainly set the tone over long periods of time, but ultimately the underlying economy is going to win out irrespective of who's president. And I think we can look back over the last 16 years and hang our hats on different arguments for different people. And the equity market ultimately does, or asset markets in general, do what they want to do. Presidents, I think, again, often get too much credit. But that said, as you progress through the year, this election in particular, they're all the most important election of our lifetimes. This one is right up there with the other one.
What do you make of sort of internally the way the market has traded? There's been more of a move to value over growth. We began the program talking about some of the FANG stocks and Microsoft being added to that, tongue in cheek a bit. But does the market need that group to accelerate in order to get out of this range that we've been in?
I don't think so. I mean, it would certainly be helpful. What I find interesting is when we talk about value stocks, and ultimately what Solus does is deep value investing. What seems to get missed, unless I'm mistaken, the number one largest value stock in the S&P 500 value index is Apple. And I don't think traditionally people think of that as a traditional value stock. I think it would certainly be helpful, but again, I mentioned Procter & Gamble, a company in which I have no interest whatsoever. They talked about 7% organic earnings growth and a continuation to next year. You're seeing growth elsewhere besides the FANGs. And so I don't know necessarily from a market cap standpoint, it would be helpful if those super large caps like Amazon picked up. That could help you take the index higher. But ultimately, the companies themselves are doing pretty well. Again, the few I mentioned earlier.
Got a quick one before we go?
Quick one. First of all, Solus, great fun. Most people don't know it. I know it pretty well.
Thank you very much.
The question is this. Couldn't the market be just topped out? I mean, you've had the market hold its level despite earnings growth come down dramatically. So that's a glass half full. When you take that in conjunction with what Megan said, why should we go substantially higher?
Yeah, listen, to borrow our old friend Larry Kudlow's phrase, profits are the mother's milk of stock prices. And I think ultimately as you enter next year and the basing effect starts working in your favor, the economy should pick up, I think. Obviously, the consensus doesn't think that. I'm not sure. And ultimately that, I think, is going to be a tailwind, especially if we get some of the contributions from the stocks that are not necessarily contributing now.
I thought the phrase you were going to use as the trade talks are going well, but I was mistaken.
There's too many to pick from.
Good point. It's good seeing you again.
No, totally my pleasure.
Good to have you.
Thank you very much.
Dan Greenhouse
Thank you,
again with Solus joining us. Here's what else is coming up on the halftime report.
Southwest shares feeling the love. The airline beating earnings estimates, despite a hit from the Boeing 737 MAX groundings. The investment committee is ready to debate the space straight ahead. Plus, John and Pete Nigerian are tracking unusual activity in the options market. There are new trades coming up. The halftime report with Scott Wapner and the Traders is back in 2 minutes.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright.
At Wix, right now, there's 15% off our wide range of tiles and flooring, on top of existing offers. In store and at wix.co.uk. Terms apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
We've always evaluated other aircraft manufacturers, and especially when there's new technology that comes on the market. We've done that numerous times in my 34 years at Southwest Airlines. So next year will be appropriate for us to do that again. And yeah, I'm primarily talking about diversifying from having a sole supplier.
Well, that was Southwest CEO Gary Kelly on Squawk on the Street this morning, talking about the 737 MAX issue with Boeing and the airline's relationship with that company. Southwest shares rallying after beating profit estimates despite taking a hit from the grounding of those planes. Let's bring in our Phil LeBeau. Phil, surprised or not by those comments?
Not surprised at the comments, because he's alluded to this over the last 6 months. So he was correct in saying it's not new news. But what is surprising is just how explicit he was in terms of showing his frustration and Southwest's frustration with the 737 MAX issue, and just how strained the relationship is right now between Southwest and Boeing. Scott, in the world of airlines, no two airlines and manufacturer have been closer than Southwest and Boeing. They have flown the 737 exclusively since the company started in 1967. You talk about two peas in a pod, it was these two companies here. And it's clear from Gary Kelly's comments that he and the board of directors, along with other executives at the airline, are going to be looking at the potential for possibly buying Airbus aircraft in the future, whether that's the A220 or perhaps an A320. That is a huge statement in itself. Now, we've known that they have looked at other aircraft, but in the past, you never heard anybody say that Southwest would seriously consider leaving Boeing. That is a distinct possibility, and he said they're going to be looking at that next year.
You think it's more likely than not? I mean, it's got to be something that he comes on TV and is willing to say it, and he's a gentleman, obviously, but you could hear the anger in his voice and his frustration with this story.
Absolutely. Too hard to say whether or not they'll actually pull the trigger and say, you know what, we're going to add the A220 or the A320 into our fleet. When you move away from having one single aircraft, as you can imagine, you're going to add complexity, you're going to add cost, and it makes a change to an airline. That's the beauty of only flying the 737 all of these years for Southwest. It's one of the advantages that the airline has had. Well, now they're seeing the flip side of that. This is the problem with flying only one aircraft. When you have the MAX being grounded for 7 months, it's hurt their capacity, it's hurt their ability to grow as an airline at a time when they want to grow. So I would not discount the possibility entirely that they might diversify and might add an Airbus type of aircraft into their fleet.
Yeah. Hey, Phil, John Najarian's got something for you.
Thank you, Scott. Phil, I got to view this as a bluff. I mean, if O'Leary over with Ryanair said the same thing, you and I would both be shouting, bluff. There is no way you're going to take that many mechanics and basically throw a bunch of new mechanics on an Airbus when that's all you've flown are 737s since the beginning of the airline. I can't believe that anybody takes him very seriously when he says that. That sounds completely like a bluff coming from Southwest, even though, as you say, this is a very respected dude. I think he's just trying to bluff.
So you think he's trying to get a better deal?
Yeah.
That in the future he's going to say, look, I want you to bring down the price of the remaining MAXs that we have on order. Let me throw this at you, John. Sure. You don't think there's a possibility that Southwest might take a look at Spirit or at JetBlue and say, you know what, we believe that this is the time for us to grow?
I think they could do that.
Now, but let me finish.
Okay.
If we do think that's the time, what's the difference between looking at possibly acquiring one of those airlines, and we're not saying that they are, right? But what's the difference between that possibility or saying to Airbus, you know what, if you can get us a sweet deal on the A220, we're interested in using that, especially in certain markets that we fly.
I'll answer that, and then you're exactly right. The only way they get into Airbus is through purchase of one of the other airlines that flies those. Because otherwise, Phil, they go to the back of the line with Airbus the same way they go to the back.
No.
What?
They're not going completely to the back, John.
John,
you tell me that Guillaume Faury, are you telling me that Guillaume Faury, the CEO of Airbus, would not roll up to the headquarters of Southwest and make a big production about the fact that Southwest, long the darling of Boeing, is placing an order for Airbus? They would find some slot positions pretty darn quick.
Who does he jump in front of? I mean, both of these guys have tens of billions of dollars in backlog. Are you saying all of a sudden he jumps over all the others, over Lion Air, over everybody else?
No, do I think that Southwest would jump to the very front of the line and get a block order of 50 A220s or A320s? No. But do I think that they would find slots so they're not waiting 6 years to get airplanes? You bet.
Hey, Phil,
I do too.
That is would be a huge feather in the cap of Airbus.
You got to believe also, Phil, and I wonder how Gary Kelly thinks about this. They're so exposed to the MAX. He must know that there's going to be consumer unease once that plane gets back in the air. I don't care when it gets back. There's going to be unease, and people are going to be looking at the equipment and trying to find out if they're flying the MAX, and they might not want to fly that airplane. He's got to know that.
The question becomes, how long does that uneasiness last, Scott? And we were talking with Joe DiNardi from Stifel this morning, and he said, look, there's really no direct comparison. He alluded to a 60 Minutes piece about Allegiant a couple of years ago where they suggested, and it was unfounded, that Allegiant had unsafe planes. And he said, look, there was unusual softness in the bookings for Allegiant after that report came out. And that was just one single report with a small carrier. The question becomes, how long will it take to convince passengers, not just at Southwest, but at American, United, and a number of other airlines around the world, that the plane is safe? And I don't care how many times the CEO gets on it or the pilots come off and say, yeah, it's great, it's safe. It will take time.
That's right. Yeah, I think you're right. Phil, we appreciate it as always.
You bet.
All right, that's Phil LeBeau for us. For the latest on this story from Chicago. By the way, tomorrow on Mad Money, our Jim Cramer is going to speak with the American Airlines CEO, Doug Parker. Pete, you own Southwest.
I do. Yep. You know what? I'm excited about this company because the fact that they still have the execution side of this thing, look, Scott. I mean, when you look at their numbers, and we already knew through United, but in others, It's about demand right now, and they have pricing power. So because of that, they were able to hit these numbers. They were very, very strong. That's why the stock's reacting the way it is today. So I think the combination of that, United, I think across the board, the airlines right now are in a very sweet spot where they're able to raise these prices as some of the demand is growing while the seats out there, because of the 737 being pulled off, is actually coming out of it.
What about the idea of about a transaction around this airline?
That's where I was going.
Whether they buy somebody or somebody buys them, a big somebody.
Yeah, I think
in the middle of the country.
I think you've got different antitrust considerations.
I wonder who?
I don't know who.
You've got antitrust considerations now that you didn't have before with consolidation. And generally, what you hear in Washington is they're unhappy with all the fees. Right. So I think it'd be a tougher hurdle for them. But let's look at the Boeing side of this. I don't think the negotiation is necessary for lower prices on planes. It's now caused Southwest, and this is my concern with Boeing, even though I own it and bought more recently, is that Southwest says we're out $500 million. That's where the negotiation is on what the settlement be between Boeing and Southwest. And I look at, we know they've lost a year of cash flow. My question is, when you take a look at all the reparations, is it going to be 2 years of cash flow they're losing with Boeing? So that's what's got to be figured out. Boeing, of course, is not going to say, here's what we're reserving for, because lawyers have told them not to do that, and they shouldn't.
JetBlue's in the same place it was in 2015. That would be the perfect acquisition for Southwest, and I think that's the solution in which they diversify these planes.
All right, we'll see what happens. All right, let's go to Kayla Tausche in D.C. has a news alert for us. Hi, Kayla.
Hey, Scott, Vice President Mike Pence just ended a roughly 30-minute speech meant to communicate to China that the administration is going to keep the pressure on as it tries to get China to end its unfair trade practices by deeds, not words, even as a phase one trade deal remains within reach. In this speech, which was given at the Wilson Center, which was originally supposed to be given in June and then delayed because of trade talks, Vice President Mike Pence said that China remains a strategic and economic rival and that its economic expansion is coming at the expense of civil liberties and the rule of law. Vice President Mike Pence going a step further than President Trump on Hong Kong, saying that the U.S. stands with demonstrators there and says that Beijing needs to end its intervention, which has only gotten worse. The Vice President also taking an opportunity to criticize Nike and the NBA and their operations in China and Hong Kong. Pence called NBA a wholly owned subsidiary of the Chinese communist regime and sharply criticized Nike for pulling its Houston Rockets gear from stores in China, saying that Nike calls itself a social justice champion, but that essentially was not acting like one when it came to the money and the lure of the market of China. So certainly a withering critique of the Xi regime in China, even as the administration continues its negotiations. Scott?
Well, thank you. We're taking a look at those shares down by a bit more than 0.75%. Let's go to Sue Herrera, who has the other headlines for us today. Hi, Sue.
I do indeed. Thank you, Scott. Here's what's happening at this hour, everyone. California officials say a fast-moving wildfire burning in Sonoma County, north of San Francisco, has rapidly grown to 10,000 acres with zero containment. Nearly 80-mile-an-hour winds have stoked the flames and residents' fears and prompted evacuations. Pacific Gas and Electric has already cut off power to that area. Secretary of State Mike Pompeo and Ivanka Trump touring Wichita State University's National Center for Aviation Training. They are expected to take part in a roundtable discussion with school and workplace leaders. And Russian President Putin seeking to expand Moscow's clout in Africa by touting military aid and economic projects at the first ever Russia-Africa Summit. The two-day summit in Sochi is being attended by leaders of 43 of Africa's 54 countries. And a long-awaited Leonardo da Vinci exhibition opening its doors at the Louvre Museum, commemorating the 500-year anniversary of the Italian's death. More than 250,000 tickets have been sold ahead of that opening, which runs until February 24th of next year. Hottest ticket in town. That's the news update, Scott. I'll send it back to you.
All right. We appreciate it. Thank you, Sue. Up next, Bill Pulte is with us. He joins us to talk the state of housing and how he is taking philanthropy to a whole new level. Don't want to miss that. Halftime Report is back in 2 minutes.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Sports update. Today we've got NFL action, Thursday night action. 8:20 p.m. is kickoff. Redskins Vikings today.
It's something you're very aware of. You also need to prepare. You need to work. You need to be here. There's certainly no excuse, coming away from the game Thursday night to say, well, it was a short week and that's why I wasn't on the details. But there's also an awareness that it's a short amount of time.
If you want to catch Thursday night football, search NFL and favorite your team. It could be Redskins or Vikings. That way you can always know when the games are going to start. That's your TuneIn Sports Update.
It's Liz Hernandez with your TuneIn Music News Update.
Keith Urban brought in Eric Church for a duet of We Were. Keith says Eric has such a knack for storytelling and choosing images and lyrics that seem like 1,000 people must have used them before, and yet they're completely original. Meanwhile, Brett Eldridge is doing another Glow Live Christmas tour, which features songs from the deluxe edition of his Glow Live album. You can find the dates on Brett's socials. For more music from Keith Urban and Brett Eldridge, search Country Roads on TuneIn.
Welcome back. Activision Blizzard up 17% over the past 3 months, and bullish options traders think there is more room to run. John and Pete have that, among other stocks in unusual activity today. Pete, go first.
Yep, I'm going to start it out. Activision Blizzard. Now, actually, these hit when the stock was trading a little bit lower than this, Scott. Just to give you an update all the way, the stock was trading $54.90. They were buying tomorrow's expiring 55 calls. They were paying 60 cents for those. Those are already in the money. Those are already starting to move to the upside. It was 5,700. You can see this volume's pushing towards 8,000 right now. So those are already starting to produce to the upside. I got a day in these max. So that's number one. Yesterday we talked about Micron. Stock was trading $44 a share. We talked about the 45 strike calls that are out November 8th. Now those have already moved. They were $1 at the time. You can see where that stock is. Now they intrinsically are worth $1.70. So you've got to take some off. You got to be disciplined. This has already moved. You've got to take some off. We're talking about a monstrous move in one day there. So be very careful.
Okay. Doc, what do you got for
Scott, got a quick one. Emirate Therapeutics, this one, December 30 calls. So you see the stock, it's making a nice upside move here. And December 30 calls, they started buying them with the stock in the 25s. Now it's pushing into the 26 range. December 30s, I'll be in these about 2 months. Second one, real quick. Last week we talked about Kronos. This, of course, cannabis-related stock. That stock popped 40% in the after hours last week. Somebody comes in again today and buys the at-the-money call, the 9 calls. They bought them in big numbers. Do we get another 40% pop in the after hours? I'm not saying we do, but these calls expire tomorrow. So that's another big bet just ahead of that. I bought them. I'll probably be in them less than 24 hours, Scott.
Wow.
Really short term.
Okay, that's super fast money.
Yep.
All right, come on back over this way. Yep. Let's talk some home builders. They've been one of the best trades in the market over the past year. The ITB, the ETF that tracks that space, surging more than 50%. Will it stay hot? That is the big question. And let's ask Bill Pulte of Pulte Capital Partners. He's a board member of Pulte Homes, as you know. Welcome back. It's nice to see you again.
Great to see you, Scott. Thanks for having me.
That is the question. I mean, this trade has been hot.
Well, I can't talk about many of the specific companies, but I will tell you, I think the housing industry and the economy is very strong, especially with consumers. You know, I'm a big investor in housing products companies in particular. Margins are stronger than ever. Our EBITDA is higher than ever. Actually, M&A activity is trading at an all-time high in building products right now, Scott. The market's hot.
So new home sales fell in September, existing down to, is there a number on the 10-year that scares you?
I just think if this thing increases 200-300 basis points, housing and real estate change. And what we saw last year was a little bit of a softening of it. And I think the market's rebounded very strong as a result. I think if you would have had any movement in terms of the Fed, you probably wouldn't have had a strong last 300 days as you had.
This is the biggest question out there, is whether the consumer can hold up, right? I mean, the manufacturing economy has been tough. The consumer's been the pillar of strength. You don't feel like there's any crack in that at all?
I was once told by somebody that mortgages are the mother's milk of housing. And as long as the mother's milk of housing is okay, real estate tends to be fairly well. And so I think with these interest rates, it's making things more affordable. And I think you're seeing that reflected in the broader, stronger market.
It's interesting, Joe, you're the one who's been all over the Masco trade. Yes. For a while, and some of these other product stocks, maybe rather than builder stocks.
I think that's the right way to play it, and one of the reasons that I've directed my investments towards Masco is the concern I have is just the valuation of land itself. Do you view that as a headwind for housing? Because it seems to be there's not much incentive to build given where the values on the land are.
Well, the good thing about land is you can't really get rid of it unless you buy it in the wrong location, right? And I think what happened in the last recession was people got really smart about where to buy property. So I think the market, generally speaking, people are buying land in good places these days. They're not buying them out in the boondocks, so to speak. So I think you're right to be focused on the building products companies. I own them stronger than ever.
You got a question?
I love, well, of course I love Bill Pulte.
You've talked about the builders.
Yep. And it's been one of the best stocks in my portfolio.
Do you have a question for him?
I've got a question. I've got a question also.
Well, you don't have a question?
I do.
Sorry,
mortgage rates, like you say, mother's milk for this sector. I think they're going to be lower for longer, and by that I mean several years into the future. So are you looking at that long of a ramp, perhaps, for some of the home builders?
The market's very strong. I think it's going to continue to be strong, absent some material change either in wage growth. Wage growth is very strong, and when people have more money, when they can access cheaper mortgages, things go well. And these mortgages that are being underwritten are pretty solid right now. I don't think you're going to see a reversion back to the last recession.
What are you seeing in the commodity inputs? They just haven't gone up, right? So it's...
Well, actually, lumber prices are up. That was going to be my question. Lumber prices are up about 30% on a year-over-year basis with quite a bit of volatility around tariffs and with Canada. So how do you factor that into your
and labor costs as well?
Well, we had a big tariff in the Chinese countertop business, and we were able to pass it on to customers. The customers were able to take the tariff increases. It's been unbelievable how much people are paying.
Wait a minute, the Chinese weren't paying for the tariffs?
Yeah, they pay for all the tariffs. That's what confuses me about the whole thing, because I think it's good for high tariffs because they pay more to us. But here, in terms of the labor force, we hear CEOs come on time and time again saying, I can't find people. So how are you doing it, or are you? Is that an issue?
I am doing it, and look, you got to find a way to hire people. If you want to have a business, you got to find a way to hire people, and that means paying them more. I pay my people well, and our building products companies have great employees.
All right, so let's move beyond housing. Talk about this other thing that really caught our eye. It's this idea of using social media as a vehicle for philanthropy, which you're doing in a big way.
Yeah.
You're giving away $1 million?
I'm giving away $1 million total on Twitter. I've given away over $300,000 in the form of cash, Tesla, et cetera. But what I'm trying to do is move philanthropy online, Scott. There's billions of dollars of philanthropy. Why aren't we using social media for good? You know, there's such hate, such vitriol on social media. Let's use social media for good. You know, Twitter, Facebook, Instagram, et cetera.
So you said you've given away $300,000. How does this all work?
So basically what we do is we connect human beings to other human beings on social media platforms like Twitter. So for instance, if you're a terminally ill cancer patient, for example, you're on Twitter. You can put out, hey, I'm a terminally cancer patient, and I need help. And we can go and, Scott, I raised $7,000, $5,000, $600. This is life transformative money for the average American. And that's what this technology should be used for.
You're tweeting out things to people to engage them, and that's how you find them to give them the money, or they have to come to you and ask you?
They just tweet at me, they mention me, and there's a whole, I call them teammates. I got 920,000 people. I had 30,000 people following me a few months ago. It's a huge community of Americans helping Americans.
And you're able to, because you have so many followers, you're able to check the veracity of their claims.
I say everybody needs to do their own research, but people are smart, right? I mean, I don't think very often you're going to see people faking that they're dying of cancer, right? And that they're out of a job and they need $7,000. That's what this is designed to do, or people who need teeth. Scott, we had a veteran who had lost his leg in overseas. We raised him, I think, $15,000 plus for a car online. $5, $10, $20. Americans all coming in to help each other.
Just crowdsourcing using social media.
Essentially.
Yeah, it's good to see you. Thanks
Good
for
to
being
see
here.
you guys.
All right, that's
Thank
Bill
you,
Pulte joining us today. Straight ahead, we're answering your questions, and you still have time to reach us. Go to cnbc.com/halftime or tweet us, and we'll be back. Speaking of Twitter in 2 minutes.
Interactive Brokers pays 1.4.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phased policy applies. See tescomobile.com/terms.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
There's It's a Thursday Afternoon happy. Listening to a banger happy. There's no traffic on the M1 happy. England won the Ashes happy. There's only 62 days until Christmas happy. Work's done for the day happy. Getting your car sorted out after work happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want thrillers, they're going to be on the edge of their seats with these. Comedy, coming up, way better than the dad jokes in this house. Or how about documentaries? I've got ones about space, sharks, or superstars. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Don't skip the start of the NBA season because you're out of the habit. Set a reminder with TuneIn. Make sure notifications are allowed on your phone and search for your team in the TuneIn app. Then, just find the game you want to hear and tap Notify Me. We'll let you know when tip-off is about to happen.
Oh, we're back. A bad day for Twitter, getting even worse. There's the stock right now. Goldman Sachs, literally just now, downgrading Twitter from buy to hold. They take the price target down from 52 to 34. Twitter's not quite at the very low of the day. The low is 31.10 as I look on the computer right now. So we're a little bit above that. But there was the miss on earnings and then the bug in the in their advertising system as well, not helping that story out today. So thank you for that. Wanted to update that.
Nicely done.
All right, let's answer your questions now. First up, we go to Joe from Lucky in California. The GDX. Buy, sell,
Buy.
hold.
Absolutely. Buy. Bought it the other day.
The GDX?
Yep.
Why?
Bought the GDX the other day is basically looking at the portfolio. It adds a defensive mechanism. It gives you diversification rather. Where the rate structure is right now in the U.S. in Europe, there's still the deflationary element. So I think GDX is your answer. I like it better than the GLD.
Okay. Pete from Evan in Tennessee. Bristol Myers.
Bristol Myers.
Why? What do you do?
A big favorite by Jimmy for a lot of years, Jimmy Cramer. But I will tell you this. I was in it. I was in the calls. Those absolutely spiked just the other day off of what was tied into the Biogen story. So because of that, I don't think you buy it here. I think you wait for a pullback, Scott. You get back down towards 52, 53 again, that's when it's a buy.
All right. John Elroy in Oregon wants to know about MasterCard.
Just had unusual activity in that one yesterday, Scott. It's November 1st expiration they're buying. So not this week, not even next week, but right at the end of next week. See a short-term trade, but they're buying the 260s. I like that one. Stock's up 3% today.
Okay. Weiss, Chris in New Jersey. You know him? You know Chris?
No, but I'd give it a shout out to the other Jetsons and Dish Tell Roy.
Okay. Adobe. It's been beaten up hard recently. Is now a good time to buy it.
Yeah, so I bought it. I bought it a little early, but I've added as it came down. I don't know why the stock's up so aggressively today. I'm short calls on the other side. That's just to hedge it. That looked great until today, but that's fine. It's protection. So, yes, I would buy Adobe here. Maybe buying it in this spike isn't great, but expectations have been set so low that I doubt they could surprise you to the downside.
All right, Hotshot, do you have a favorite Jetson?
Come on,
Astro.
George. Astro.
Astro is my favorite Jetson. Astro.
All right. Sorry, I asked.
It's not George. It's not Jane.
Took you a little while.
His wife.
There.
It's not
It's
Rosie,
been a while.
the maid.
Been a while.
You know,
All right,
Rosie's
Megan
hot.
Chu, the consumer from Daniel in South Carolina, been in the XLY for a few years, loved the upside. Do you think it makes sense to buy into something like the XLP or another Staples fund at this point?
So we increased our Staples exposure back in May. I would not be a buyer at this point. Our base case is that the consumer remains resilient. Interest rates move higher. That would all be more favorable for a consumer discretionary, but wait to see how trade unfolds.
Okay, coming up, it's a red hot semi stock and it just got a big upgrade. We'll do it in our call of the day next, and of course, final trades.
Teaching shapes lives. Becoming a teacher means a career of opportunities. You could head a subject department or work towards school leadership. And with a minimum starting salary of £24,000 to £30,000, teaching has never been so rewarding. Teaching. Every lesson shapes a life. Search Get Into Teaching. Starting salary dependent on location.
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
There's It's a Thursday Afternoon Happy. Listening to a banger happy. There's no traffic on the M1 happy. The in-laws aren't coming round tomorrow happy. There's only 62 days until Christmas happy. Work's done for the day happy. Getting your car sorted out after work happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want dramas, OMG, I've got Chernobyl. Documentaries, I got ones about space, sharks, or superstars. Or how about horrors? No problem. It's not real, it's not real, it's not real. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew. Terms apply.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
All right, Lam Research hitting an all-time high today following a beat and raise Q1. Citi raises the target on the stock to 282 from 280. They reiterate that stock as its number one equipment pick. Is that your number one pick too, Joe?
It is. 282 is too low. 302. That's where it should be. Memory, the demand's coming back once again. The equipment story, Texas Instruments, was a one-off. You're seeing it bleed through into other names. Applied Material looks good today. I'm staying with this.
Yep, there it is. Big winner today. All right, let's do final trades. Weiss, go. What do you got?
FedEx. Look, it's another one beaten up that I bought, and I think it's doing well. Today it's down a little bit. I think it continues to move higher. Earnings aren't for a while. Buy FedEx.
Pete.
You know, deep in the money call buying in Blackstone today is pretty interesting to watch, and they're going way out to March, so they're buying a lot of time, and they're deep in the money, so they're basically a surrogate for stock. I like what we're seeing out there. I don't own it yet, Scott.
Okay. Doc?
Scott, I talked about Kronos and a potential for some squeeze again in the after hours. They're also buying Tilray calls, upside calls right now. I bought those during the show.
Megan Shu.
We like the cloud computers, as I talked about earlier. We like the structural growth that you see there. If you do get a recession, not our base case, but we would expect that growth to slow from 2030, maybe to 10 to 15% growth, because companies just have to invest there.
And Joseph? MKS Instruments, ticker symbol MKSI, is rallying along with Lam. That's a small cap semi-equipment name. It's got further to move to the upside.
All right, good stuff. Good seeing you. Thanks for being here.
Thank you.
All of you as well, and thanks for watching. The Exchange with Kelly begins right now.
Thank you, Scott. Here's what's ahead today. Vice President Pence wrapping up his highly anticipated China speech. And while his tone towards China was a bit softer than last year, he was pretty tough on corporate America. We'll have what he said, who he went after, and what it means for our trade talks. Plus, the busiest day of earnings season, bringing surprises, disappointments, bold CEO statements, and some warning signs today. We'll dig into all of that. And why Elizabeth Warren's private equity reform push may not stop the corporate looting she's worried about. We'll explain. But first, we begin with today's markets, and Dom Chu has the state of play.
All right, so the state of play is some slowing momentum, but it's not terrible. As you can see here, the Dow's down by about 56 points, and there's a big reason why. We'll get to that in just 1 second. But the S&P 500 just cannot seem to get above or beyond that far away from 3,000, and we still hover there right now, just about up 11 at the highs of the day. We were down 4 points in the S&P at the lows, so just hovering near the lows of the session right now. The NASDAQ outperforming up about 2/3%. If you're looking for one of the industry groups that continues to show some solid momentum all year long, check out what's happening with home builders and home construction stocks. This ETF tracks them, ITV. It's up 0.75% today. Nothing crazy, but take a look at this. Since the lows in December, this particular ETF is up 60% during that time span. A huge move higher. And by the way, none of these drawbacks has been more than 5 to 7%, so a steady climb higher. And the reason why the Dow is lagging so much today, check out what's happening with shares of 3M, off 4%, by far the biggest drag in the Dow so far today after they miss earnings, miss sales estimates, and cut their full-year forecast. Sales slowdowns in China offsetting some gains, modest in the U.S., but 3M shares, Kelly, certainly a stock to watch today, a big part of the Dow drop. We'll send things back over to you.
Yep, Dom, absolutely. Thank you. Welcome to the Exchange, everyone. I'm Kelly Evans, and our lead story today is a reversal of fortune for two battleground stocks. Twitter was having a strong year, up 35% until today. The stock is sinking nearly 20% now after disappointing earnings. Then there's Tesla. Investors hit the brakes on this name this year, sending shares down 23%, again until today. Now the stock is up 15%, 16% and change now after a very surprising profit. Let's delve into both of these now. Julia Borson and Phil LeBeau join me. And Julia, let's talk about Twitter first and the advertising issues there.
Advertising issues. I mean, what I think is really interesting here, Kelly, is this is a company that grew its daily active user base faster than expected. They added twice as many daily active users than analysts had anticipated. They added 6 million daily active users in the quarter. While they were doing that, their revenue came in less than expected, as did earnings, as did guidance for the fourth quarter. And the company explained that this was due to two issues. One, they had advertising glitches, technical glitches around their products. They weren't able to target ads as well as they had anticipated and then give that measurement, valuable measurement insight back to advertisers. And second, they attributed it to seasonality. There tends to be slower advertising during the summer. They said that it was slower in July and August and then picked up again in September. But they say that these issues could continue to impact the fourth quarter. So the good news is it was a glitch that really had a huge part of this impact. Right. The bad news is if you can have one glitch have this much, or two glitches have this much of an impact, it raises real questions.
And that's behind this Goldman downgrade on the stock that we just got, taking it from a $52 price target down to 34, and it's at around 31 right now. And they're saying it's on these advertising issues. One question that's come up, understanding what Twitter says is the problem, do they have a larger problem with advertising on a platform that a lot of people deem as toxic or untrustworthy in terms of where their content's appearing relative to some of the more trolling commentary?
Jack Dorsey tried to address these very issues in their earnings call today. He said that they're getting better at pulling down abusive content. In fact, they're pulling down half of what they pull down, they do before anyone reports it or sees it. So he says they're making progress there. But I think when you look at the advertising product as a whole, this is a company that has made so much progress in figuring out its
business model. They say, hey, we're not going to talk about monthly active users. We're going to tell you just how many people are really engaged on this product every day. That's why they're focusing now on these daily active users. They've shown that they could generate revenue from them. And I think one reason the stock has sold off so dramatically today is because it looked like they were on a path to make more money from their growing user base, slowly growing user base, and now there are questions. Maybe their advertising system isn't as sort of robust as it seems.
Absolutely. Julia, thanks. We'll see you again in a few for Rapid Fire. Julie, appreciate it. On Twitter, that's Julia Borston. Let's now turn to Tesla, swinging to a surprise profit in the last quarter. Phil LeBeau is here. And Phil, man, this is a really, really interesting profitability turn. What's it come from? How did analysts not see it coming, or anybody else for that matter?
Well, everybody missed it, because when the number came out yesterday, Kelly, more than once I heard people say, can we really trust this? Is this really accurate? Yes, they did swing to a surprise profit. The expectation was for a loss of 42 cents a share. Tesla reported a profit of $1.86 a share, and they did it by having much lower than expected operational expenses and higher gross margins for the automotive division. So Tesla reaffirms its 2019 delivery guidance. That's the other piece of news that came out yesterday. Yes, they do plan to hit that target of delivering at least 360,000 vehicles this year. As for the Model Y, its next vehicle, here's what CEO Elon Musk had to say on the conference call last night.
We're confident about Summit 2020. I've actually recently driven the Model Y release candidate and think it's going to be an amazing product and be very well received. I think it's quite likely to, this is just my opinion, but I think it will outsell S, X, and 3 combined.
As you take a look at shares of Tesla, yes, he did say that they plan on having the Model Y by the middle of next year. That's a move up in terms of when it's expected to roll out compared to the end of next year. Also, the China plant, it's ahead of schedule. Production expected to begin and deliveries begin before the end of the year. They already have some test production going on over there. Robin Denholm, who is the chairman of Tesla. Remember, she was brought into that position when it was clear that Elon Musk would not be able to keep that position. She will be talking with us tomorrow morning on Squawk Box. You do not want to miss this interview, 7:45. You can bet the Squawkers will be asking her about life with Elon Musk and how it's going right now.
I will definitely be catching that one, folks. I love the story. But while you're here, I also want to ask you about the airlines on earnings today. Both Southwest and American are up, and both CEOs threw some punches at Boeing. American CEO Doug Parker said, quote, "We're working to ensure that Boeing shareholders bear the cost of Boeing's failures and not American Airlines shareholders." And he was followed by Southwest CEO Gary Kelly saying this when asked about Southwest diversifying away from Boeing. Take a listen.
I'm not saying we're going to change. I'm simply acknowledging that that's something that will need to be reviewed, and next year will be the time to review that.
He's not saying they're going to change, but Phil, I mean, that would be a huge blow reputationally if the biggest customer, at least the most reliant customer on Boeing, goes the Airbus way.
Oh, yeah. These guys have been two peas in a pod since 1967 when Southwest began flying the 737 as the airline was launched down in Texas. Look, these guys both beat the street today, but it's the comments from the CEOs that's getting the most attention. Look, they've been without the 737 MAX since the middle of March, and they continually have moved back their schedules. Now they've had to cut capacity. And for Southwest Airlines, which has more 737 MAXs than any other airline, they're not only dealing with 34 that were grounded, there are a whole bunch that were supposed to be delivered this year that they're not taking delivery of. And that's why you heard this from CEO Gary Kelly earlier today on Squawk on the Street.
I've been very clear. We're not happy about our situation. We put our future in the hands of Boeing and the MAX, and we're grounded.
And one other airline to keep your eye on, Alaska Airlines. It will report its Q3 earnings after the bell. And guess what, Kelly? This is another airline that has an order for 737 MAXs. I'm sure when Brad Tilden joins us on the closing bell, there may be a question or two about how they're dealing with this. Now, they weren't flying any when the grounding happened, but like everybody else, they had a delivery schedule that they have now had to adjust.
Yep. And we spoke with an analyst earlier this week who thought Southwest might be forced to buy the likes of JetBlue or Alaska to deal with the loss of these aircraft. Phil, thanks for now. We appreciate it very much.
You bet.
Phil LeBeau wrapping all of those headlines up. And since yesterday's close, 130 companies have reported earnings. Of those that updated their guidance, 11 of them raised it, while 25 lowered it, according to Bespoke. Some companies face issues specific to their industry, while others are bracing for broadly negative trends. With me now are Bryce Doty, Senior Portfolio Manager of SIT Fixed Income Advisors, and Art Hogan is Chief Market Strategist at National Securities. So, Art, we started off earnings season with the banks, a lot of beats there out and some outperformance. The industrials have been more of a mixed picture. 3M today on China. Does that worry you?
No, because we should expect that, right? So coming into earnings season, we have PMIs and ISMs rollover. So we kind of knew what was working in the global economy and what wasn't. Manufacturing is certainly not working. So Caterpillar, another name, tip of the sword for U.S.-China trade. We understand that it's the magnitude of how much of that has been priced in.
Right, which in Caterpillar's case saw the stock move up after
Right, exactly. So we kind of knew that. 3M, I think there's a larger surprise because our expectations set had been higher. So you have to check those boxes: earnings, top line, bottom line.
What about Texas Instruments as well,
right,
which is a big bellwether semiconductor chip maker? They come out, they miss, the shares are down big, and everyone's wondering, is that some kind of sign, or is it an industry-specific
Right.
issue?
So then you have to step back and say, are they over-indexed the handset, and do we know handset sales are slowing because we're waiting for 5G? And I think that's the case, as opposed to saying the entirety of semiconductors is doing poorly because they're not, right? So we think
look at Lam, right?
Exactly, and NVIDIA is probably going to be fine. So you really have to step back and say, is this company specific to Texan, and were our expectations set wrong there? And of course they were. Should we have known that a little bit? Because we know global handset sales are down for a lot of reasons, not the least of which people are putting off that decision until 5G rolls.
And it's interesting, Bryce, because 3M talked about the kind of vulnerability points being China, autos, electronics, which Texas kind of relates to as well. So there are places that are doing very poorly right now, and others that are holding up okay, right? So as we move through this earnings season, maybe move into the retail portion of it as well, look at how well the home builders are doing. Where would you be?
Well, it's really tricky to figure out where the pockets of weakness are in the manufacturing sector, because there aren't really good broad measures that differentiate between domestic manufacturing activity versus the ones with international market manufacturing activity. It's all kind of lumped together. So when we see these earnings come out, it does help. You can say, okay, this company has a problem, this one doesn't. As a bond investor, none of the earnings surprise or announcements, one way or the other, positive or negative, are really affecting spreads too significantly.
Okay.
In October, it's always a little dicey for the stock market because everyone lowers their expectations for the year. They were, probably a little too optimistic at the beginning of the year, but nothing is really blowing anything up. So,
Bryce, let me ask you,
we're okay with some risk there.
We don't have a lot of time, so I just want to get right to the point. Next week, the Fed meeting, you think they're going to cut again. The president this morning tweeted again that he thinks they should lower rates. What impact will that have? I assume you'd think that would be a more important force for fixed income.
Definitely. It's going to re-steepen the curve. 2019 will be the year of the inversion, and it's going to be gone. You won't see an inverted curve next year. The Fed will cut it, for sure next Wednesday, and maybe even again. They need to, in order to continue to inject liquidity into the repo markets. They need to make the rate that banks earn at the Fed less attractive. They need to kind of push that cash back out into the repo market. So they're going to keep doing that, and that's going to prop stocks up. So I think you're going to see a steeper yield curve and a strong stock market, at least for now.
Trumps all. Gentlemen, thanks. Appreciate it. Bryce Doty, Art Hogan, talking through these market moves today. Here's what else is coming up on the exchange.
Coming up, Nordstrom's takes a big gamble on a big physical store at a time when the retail world is evolving quickly. With the stock down big this year, will this strategy pay off? Plus, Elizabeth Warren is taking aim at private equity. But could her proposals do more harm than good? And PayPal stock moving higher despite lowering guidance. We'll tell you why Uber plays a role. This is The Exchange on CNBC.
There's golf.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
At Wix, right now, there's 15% off our wide range of tiles and flooring, on top of existing offers. In-store and at wix.co.uk. Terms apply.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
She did it! Her first word! Listen, everyone. Mama. Oh, she's lovely. Mama. Oh, did you hear that?
Oh.
Savings. Savings account.
Teaching your kids how to save may not be this easy, but you can get them learning good habits and skills from an early age, thanks to the range of children's savings accounts from Yorkshire Building Society. Just another example of real help with real life. Find out more at ybs.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Comedy, coming up. Way better than the dad jokes in this house. Or how about dramas? I've got all the big shows from Sky Atlantic. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Welcome back to The Exchange. Vice President Pence delivering a highly anticipated China policy speech a short time ago. The speech coming at a pivotal time in the trade talks and a year after he harshly criticized Beijing, and a speech that got many talking about a new Cold War. Kayla Tausche has all the details from what he said today. Kayla?
Kelly, he invoked that speech a year ago. It was a withering critique from the vice president on China as a strategic and economic rival intent on curbing civil liberties and intervening in democracies like Hong Kong. Pence said the U.S. stands with demonstrators in Hong Kong. That's the firmest language the administration has used thus far, and condemned recent actions by Nike and the NBA.
In siding with the Chinese Communist Party and silencing free speech, the NBA is acting like a wholly owned subsidiary of that authoritarian regime.
On trade, Pence said the U.S. is ready to reset the relationship if China ends its abusive trade practices. And on whether the White House wants economic decoupling, Pence said a resounding no, Kelly. He said it is his hope that this Phase 1 deal gets signed, but that the hard work will start after that.
Kayla, stay right there. Let's dive deeper into today's comments and what they'll mean for trade talks and for business. For that, we bring in CNBC contributor Michelle Caruso-Cabrera. Hey, Kelly. Michelle, this is an interesting one because on the one hand, he could have been tougher on China. Remember, this was a speech he was originally going to give on the anniversary of Tiananmen Square earlier this year.
And then didn't.
And then didn't, exactly. But at the same time, he's very tough on corporate America, especially Nike and the NBA, with regard to their posture towards China.
If you look at this speech in isolation, I think you'd see it and say, oh, this is a very hawkish speech. Then you compare it to 1 year ago, and it actually sounds more dovish. If you Google that speech, back then, every headline was about China's malign activities. That's how he described them. He's clearly pulled back from that very harsh critique, as you say. It's gotten softer, even as he's listed a whole litany of issues, including the situation in Hong Kong. The stuff about Nike, I see that for domestic consumption, and also as a signal to companies here.
Red meat to the base,
red meat to the base, but also if you're going to harshly criticize this president, remember, we're going to be watching for how you react to China and how you behave when it comes to China.
So, Kayla, when we look at this as signal in the trade talks, what does it tell us? Is there... He could have not given this speech altogether. He clearly chose to go ahead and press forward with it. He does talk about, backing Hong Kong, although, again, there's always a way to be more explicit, maybe in that backing. What does it tell us about the progression of these trade talks?
Well, there are two goals, Kelly, with this speech. One, there is a development in trade talks around the corner in the expected signing of that Phase 1 deal. But the vice president here wants to deflect the criticism that President Trump is now backing off of his hardline on China, and he's going easier on China despite creating a situation where he has had unprecedented leverage to bring Chinese negotiators to the table to try to reset that relationship. So here he's trying to deflect that criticism and say, no, we are still keeping this hard line. I am the bad cop if President Trump is the good cop in trying to move forward with that Phase 1 deal, but saying that they are still going to be opening those Phase 2 negotiations, that they still see China as a rival, that they are not forgiving the debt diplomacy, the surveillance state of China, using a lot of these incredibly withering descriptions of Chinese operations and sort of signaling that this is not the end of the hawkishness.
You know, Michelle, he says people sometimes ask whether the Trump administration seeks to decouple from China. We talk about that on the show all the time.
Yep.
He says the answer is a resounding no. So what is corporate America supposed to do?
I think actually he was pretty clear on that point, which is the U.S., he says, doesn't want to decouple from China as long as they start to act in the way that a modern economic nation should act when it comes to reciprocity, when it comes to fair trade and free trade. I mean, the message has always been, we are harsh on China because they are harsh on us. We are doing things to them that they have long done to us when it comes to trying to limit the amount that they invest in us. Right. When it comes to tariffs. I think it's
woken up to, I mean, if anything, the public feels like it's now more hawkish.
Right. Absolutely. But to Kayla's point, it sounds like it's trying to thread a needle here by explaining how has the policy shifted and how are we still trying to achieve, and the administration trying to achieve its goals with China.
Diminishes Cold War talk?
Definitely. Compared to the speech a year ago, absolutely diminishes. Remember, the speech a year ago was at the Hudson Institute, defined very much as a conservative institute. You would not call the Woodrow Wilson Institute the same thing. That in itself, the location, is a signaling mechanism on the part of this administration.
All right. Great stuff, guys. Thank you. Michelle Crusoe-Cabrera and our Kayla Tausche, really appreciate it. Coming up, Elizabeth Warren has some very harsh words for the private equity business and plans to shake it up. But could those plans backfire? We'll explore. Plus, it's taken Nordstrom 7 years to open its flagship New York City store. A lot has changed in retail since construction began. What's in store for the store? As its stock continues to drop, the exchange is back in 2.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores. Do you remember picking out your engagement ring in the jeweller's window? Or choosing your first home? Or deciding the names of your children? When it comes to the important choices in life, you've always taken the greatest care. So shouldn't the same go for which firm of funeral directors you use? After all, that's an important choice too. At Dignity Funeral Directors, we're like you. We also take the greatest care. Our name is your assurance we'll be there by your side every step of the way. Just look for the sign that says Dignity. It's on all our branches and on the Dignity website. Dignity Funeral Directors, taking the greatest care.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Welcome back to the exchange. Dow right now is lower by 68 points. As mentioned, a lot of that is 3M after its earnings weakness, where it called out softness in China, automotives, and other areas. The S&P is hanging on to green right now. 3,005. We're up a point. The NASDAQ up a nice 0.5% today. Let's check in with Bob Bassani, who's at the New York Stock Exchange, with more, Bob, on the theme you find from all these earnings reports.
Yeah, there is a trend here. We've seen some numbers that have been missed, earnings numbers missed, and some lower guidance in the last few days, but there's a common theme amongst all of them. Just look today, she was mentioning 3M there, was lowering their guidance there, slower demand in China, some tariff issues, Stanley Black & Decker lower on tariff issues, lower in industrials, lower in emerging markets as well. And then we also had Ford reducing its full-year profit forecast, lower than expected China sales. So what's this all have in common? Well, the common theme is exposure to several industries, autos, industrials, and then China. If you have exposure to one or in particular all of them, you've got a problem. And we've seen examples of this. 3M, Stanley Black & Decker, Ford, Caterpillar, and even Texas Instruments cited, which had exposure to all three of these areas. And that's the trend there. Watch out for those particular exposures. Still, 2019 earnings still in the flattish area. What's flattish look like? Third quarter numbers, we're looking at down 2.3%. That was about 3% a week ago, but that's what I mean by flattish. Fourth quarter was 4% a month ago. Now it's 2%. This is what flattish looks like, and we'll see what goes on in 2020. Want to just make sure you understand, Kelly, that only 14% of companies are missing estimates. That's about average right now. 83% are beating, so we're getting a normal amount of them. But these high-profile companies are the ones that have the big global exposure in the industrials and the autos and in China. Kelly, back to you.
All right, Bob Bassani, thank you very much, sir. Appreciate it. Let's get over to Sue Herrera now for our CNBC News update. Sue?
Thank you, Kelly. Here's what's happening at this hour, everyone. Representative Elijah Cummings lying in state at the U.S. Capitol, where he served for 23 years. Family, friends, and members of Congress were on hand to pay their respects. House Speaker Nancy Pelosi says he helped shape America's future.
Elijah was truly a master of the House. He respected its history, and in it, he helped shape America's future. I have called him our North Star, our guide to a better future for our children.
The remains of Spain's late dictator, General Francisco Franco, arriving by helicopter to El Pardo after his body was exhumed from his mausoleum. The remains will now be reburied in a smaller family crypt where his late wife rests north of Madrid. Here at home, Subaru is recalling nearly 500,000 vehicles. The recall covers the Imprezas from the year 2017 and 18, as well as the 2018 and 19 Crosstrek models. The automaker says the engine computer can keep powering the ignition coil even after the motor is turned off, and that could cause a short circuit and a blown fuse. You are up to date. That's the news update, Kelly. I'll send it back to you.
I've got the Outback, so I guess I'm safe.
I think you're safe.
For now. So thanks very much. Here's what else is coming up today on the exchange.
Ahead, why Uber is forcing PayPal to lower guidance. Washington ramps up pressure on TikTok. Why eBay says consumers are leaving items in their cart. And WeWork's new executive chairman says there's a new reality in Silicon Valley.
If you're thinking about buying a new home, here's some great news. Mortgage interest rates have dropped. This means right now is a perfect time to save money when you're ready to buy a new home. But even if you're not ready to buy quite yet, that's okay. At Quicken Loans, we believe you should be able to benefit from a great rate before you even begin your home search. That's why Quicken Loans created our exclusive Rate Shield approval. It's designed to protect you from unpredictable interest rates. Here's how our Rate Shield approval works. First, we lock your interest rate for up to 90 days while you find your new home. Then once you've found your new home, if rates have gone up, your low rate stays locked. But if rates have gone down, your rate drops, and you get to keep that new, lower rate. Remember, mortgage interest rates are low right now, and that's great, but you never know when they may rise. So protect yourself and take the worry out of unpredictable interest rates with a Rate Shield approval exclusively from Quicken Loans. If you're thinking about buying a home, call Quicken Loans or go to rocketmortgage.com today.
My reputation was trashed online. I felt completely helpless.
My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-548-2837. That's 1-800-548-2837 now. Analysis that gives you an edge. Fast Money, 5 p.m. Eastern on CNBC. Companies on the move. Trends for the long term. Legendary buy and hold investor Ron Barron's list, where he's finding value now. A Squawk Box exclusive tomorrow.
Welcome back. Let's catch you up on a couple stories that should be on your radar today. It is time for Rapid Fire. And here to take on the headlines are Robert Frank, Julia Borston, welcome, and Dom Chu. First up, the impact of Uber's disappointing IPO is popping up in some unlikely places. PayPal slashing its full-year earnings guidance due in part to paper losses on its stake in the ride-sharing giant, guys. Doesn't seem to be hurting investor appetite, though. The stock is surging more than 8% right now on an earnings beat and a 64% jump in volume for Venmo, of course.
I mean, I think what's so interesting here is Venmo seems so promising. You see this huge business potential going forward. And then also, if you look at payment volume, which is the metric that really matters here, are people using PayPal and also Venmo? Do they treat this as a utility? And the answer seems to be yes. So the fact that payment volume was up, I think is really what's driving the stock higher.
Payment volume up 64% at Venmo. I mean, that's crazy. But how is it still not profitable? With 64, I mean, how is that an expensive platform? What are the capital costs for Venmo once you have the platform? How is it not making money?
Well, I think you have to remember it's so important to have tight security, and they don't charge. I mean, they want to get you in the door by not charging if you're linking it to a bank account. And they charge if you're linking it to a credit card, but not to a bank account.
A lot if you're charging to a credit card.
What I think is easy, you look at the other side of the equation, and eBay shares have tanked. And I was like, I remember the days when eBay and PayPal were actually the same thing, and that PayPal was a utility.
PayPal, right.
It was a utility, so people could pay for their goods on eBay.
And now the PayPal story is Venmo.
Right, and the PayPal story is bigger than eBay now, which is kind of crazy if you think about it. But it just speaks to this idea. And I would say this: I thought it was just for the youngsters out there, but increasingly more and more.
A youngster.
No, but I mean, I'm in my 40s, so I guess I'm not. I'm Gen X, but I mean, the 13 to 25-year-olds use it. But now even folks that I know who are in their 50s and 60s are all just Venmo me, and I'm like, all right, well, maybe this has something to do.
But I also think as people become more familiar with them, things like QuickPay. I mean, I know use a lot of QuickPay. It's a Chase thing, but all the banks now have their own versions of this. Can Venmo maintain its edge?
What made Venmo superior in terms of utility is not Venmo itself, but the fact that it came in the age of mobile devices. Yeah. And that's what PayPal didn't have that going for it when it first started, but Venmo certainly does.
Remember, this is what Libra is tackling as well, what Facebook has been pushing.
Libra, Julia, we are not going down the Libra rabbit hole. We don't have time. But let's talk some TikTok, shall we? The data shows the number of new users on that app just fell for the first time ever last quarter, dropped around 4%. Now, this comes as two senior members of Congress are calling for a federal review into whether this social media company, because it's Chinese-owned, poses a national security risk.
So I have to point out, it dropped 4%, but there were still 177 million first-time users across Apple and Android. So the growth is slowing, but this is still a very fast-growing app. And it's really the first one we've seen in years that has any shot of really becoming a rival to Snap or Facebook or Instagram.
Was it the Journal the other day who had a story about the after-school classes, like drama club type things, where they work on making TikTok video? You're right. This is it's a social phenomenon. But should parents be saying to their kids, don't get involved with this, or should the U.S. be worried that this is a Chinese Trojan horse?
Well, so I think it's interesting that these senators are pointing out that ByteDance, which is this $75 billion private Chinese-owned company, owns TikTok. But we've reached out to TikTok in the past and asked about censorship. They say the Chinese don't tell us what to do. We are run out of the U.S. But I think going forward, the bigger TikTok gets, the more these questions will be asked.
The one cautionary tale there is that they are spending a lot of money on Facebook and other platforms to buy those eyeballs. That spending declined in the quarter. So you wonder, once it is off on its own and they have to really generate organic growth, can they do it without buying those eyeballs?
I'm just a little bit more curious about whether or not that slowdown, how much of that can you directly attribute to the idea that it is China? Or that it is a Chinese-owned company, or that ostensibly there might be some kind of state involvement.
I mean, the competitors already, right? This Visco, I hear about, there's other TikTok
My daughters
wannabes.
go through apps like that. I mean, it's super cool 1 month, and then 2 months later, it's like, oh, that's so last year.
The thing is, the demographic is so young. It is his daughters, so I don't know if they care about the China ownership or if it's their parents.
Right.
And at what point the parents start to
Well, remember, things like the NFL have launched TikTok channels, so to the extent that NBA was just called out by Mike Pence, pretty sure that's who has to probably be thinking about being on the platform. Anyhow, speaking of the Wall Street Journal, they have a new investigation today on Amazon. Turns out the apparel for sale on the site, some of it is made in foreign factories that most U.S. retailers have blacklisted, including places like Bangladesh, which violated safety standards and had that horrible fire a few years back. Now, while some of the items were actually produced for Amazon directly, no surprise, more than 2/3 of them were from third-party sellers. So here, to me, is the interesting question. Facebook right now, obviously on Capitol Hill this week, over how it polices content on its site. Does Amazon now need the same scrutiny if it's effectively just saying, we're just a platform for commerce that happens on here?
It seems inevitable that it will be held accountable for the products that it sells. It says it's a marketplace, but Amazon is taking all these steps to be more environmentally responsible. And at the same time, if it's selling products and taking a margin, taking a cut from products that are both potentially terrible for the people working in the factories and also horrible for the environment, I mean, I think this is sure to become an issue for them. I mean, fast fashion is increasingly facing scrutiny, and I think there's no question that Amazon will have to.
And it's not just that. We talked a few days ago about expired
goods. It's deja vu all over again.
Absolutely.
By the way, kudos to the journalists at the Wall Street Journal. I mean, this investigation where they use shipping records and labeling, I mean, just incredible piece of investigative journalism. The problem with Amazon is they say, well, we do require our third-party sellers to tell us whether they're adhering or not. Third-party, it was clear from the article, they didn't, in fact, ask anything of the third-party sellers, whether are you complying with these rules or not. So it was clear that's what was missing from this whole equation. Amazon could say, it's not our fault. Third-party sellers said, it's not our fault. They never asked.
And pertinent to the stock especially is, so the consumer chief, Jeff Wilke, was at the Journal's Tech Live conference. On Tuesday, he said Amazon might need to spend billions of dollars to police products on its site. Now, that gets to the very heart of its business model and its ability to generate profit going forward.
I was going to say the first thing I think of when you say billions of dollars to police is margins, right? And so they're going to have to do this. And as a result, Amazon, which has spent a lot of time trying to get back to a level of profitability outside of the Amazon Web Services side of the business, is now going to be faced with even more regulatory compliance.
Exactly.
And that's going to add cost there. So the margin pressure, is it enough for investors to say, okay, we'll give you more runway today?
And not a good look for the richest man in the world to be tied in any way to these types of factories.
They report after the bell today, so we'll see. They will very likely face questions about all of this. But speaking of spending money, how about what's happening in TV land right now? The launches of all these streaming services, Apple, Disney, NBC's is coming next year. It's highlighting the booming cost of making these TV shows. New programs like The Morning Show on Apple TV Plus and the Star Wars spin-off series The Mandalorian on Disney Plus are expected to cost at least $15 million per episode to produce, Julia, and they're saying the expectations from viewers, they want a Hollywood-like product.
They do. The quality of the product that these news services are making is so high. It really looks like movies. And I have to say, I just went to the premiere of an Apple TV show called For All Mankind, and it's about astronauts in the space race. This is not even a movie. It's a 60-minute show, but Apple did this sort of Hollywood-style premiere with a red carpet and everything. And it looked like a movie. It was high quality enough to show on a big screen in front of a huge theater full of critics. And I think what Apple is trying to do here is show we are making such high quality content, it's worth subscribing even if we only have a dozen shows at launch. And I think all of these services are trying to show, maybe they're bundling it in with something else, maybe you'll get it for free if you buy an Apple device, but at the end of the day, they want to show it's actually worth paying for.
It is just a goal. I mean, it is good to be on the other side.
How many red carpet openings can you attend now? There must be one every night.
I mean,
there's a new show every night.
For every one of these streaming
This is the very
services.
first one that Apple had ever done, and I was so curious what it was going to be like. And they wanted to tell Hollywood they had arrived, and they were willing to pay.
What about for actors? I mean, there's always a sense that like actors are out of work, they have to be waiters. I mean, is it booming for them as well?
I think the whole thing, though, is they're competing for top talent. These Apple TV shows, they're starring movie stars, people who've never done a TV project before, and so their salaries are going up because they're in such high demand. But they really need those big names to help draw
Jennifer
eyeballs.
Aniston, was it $1.5 million per episode?
Remember when it was a big deal when they were making Friends and they were going to get $1 million an episode?
Yeah.
I mean, inflation adjusted,
That was
we're
for
not
the
even
whole
up to that yet. Was it? It wasn't individually? Oh my gosh. Okay, then never mind. We are way now above those levels. Before we go, this is a public service announcement. Stay home from work if you're sick, please. Because if you think your coworkers, Tom's hanging his head in shame already. Yes, 90% of people in a new survey from Account Temps, a global staffing firm, say they have come to work while having cold or flu symptoms. More than half say it's because they have too much work to do. 40% just don't want to use sick time. Which was it for you, Dom?
It's all of those things, all of the above. And Lacey O'Toole, our managing director, is probably sitting there going like, "You better show up to work." Sometimes. But I mean, all kidding aside, I do show up for work when I'm feeling sniffly because I was part of a generation, as my parents were before me, where you said, "Suck it up."
Yes.
If you're feeling like you're ill, just play through the pain, get through it, go home, sleep it off, and do whatever. These days, it's becoming increasingly less.
Now you're a
correct to do
pariah.
so. Right. So as soon as we did this story early this morning on Worldwide Exchange, and immediately one of the producers from Squawk Box ran downstairs and says, "Don't ever come near me if you're in the office sick again." So I guess I'm just going to stay home.
It does seem like a generational change has happened. I don't know if I mean, clearly people went to work sick in the past, and I get, did everybody just deal with it? But now it's like no longer okay.
I have a whole pharmacy in a drawer at my desk, so I'm prepared for any situation. But it's hard to stay home when you know you have something to do. And I think it's really about figuring out that balance.
Yeah, well, I mean, look, with email and everything, it should be easier than ever to just...
I think I do think the 40% is under. I think it's more like 60% don't want to use a sick day. They'd rather use it to do something fun and then just go to work and not really do much. For
Charlotte and Miami were the cities where had the most employees to show up while feeling ill. Charlotte and Miami were watching you. Okay, Austin,
you know what
Chicago.
they're doing in Miami when they're sick.
They don't want to use those sick days ever. Nice, thanks. Robert Frank, Julia Borston, and Dominic Chu. Coming up, pensions will need a bailout within the next decade, according to one Wall Street strategist. The factors that get us there and the fallout, we will explore that. Plus, Nordstrom's new store is opening its doors today, I should say, and a retail environment that's been turned on its side since that store's conception 7 years ago. With department stores sinking this year, is this the right time? The Exchange will be right back.
What does the word partner really mean? Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Carl's All Change Casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
As the 2020 campaign heats up, presidential candidate and Senator Elizabeth Warren proposing the Stop Wall Street Looting Act, taking direct aim at private equity and introducing a slew of new regulations. As she rises in the polls, investors are asking what the market could look like under a Warren administration. But could a crackdown on private equity backfire? Let's bring in Brian Reynolds. He's chief market strategist at Reynolds Strategy. And Brian, what do you think would be the real world impact if a ban like that happened?
I think it would backfire.
Yeah.
I think it would backfire. I think we would see more shadow banking, not less shadow banking. If buybacks were banned, we'd see companies do more LBOs. And if there was a crackdown on private equity, we would see our public pensions, who are the dominant global investor, just do the LBOs directly, and they're free of federal regulation.
So you're basically saying if Elizabeth Warren tries to put private equity out of business, CalPERS is going to get into the business itself.
It's already trending that way. CalPERS and CalSTRS and another county pension in California are already looking at plans to make direct private equity investments and hire the private equity firms merely as managers.
But is there a way that she could get rid of that kind of activity altogether? You know, loading up companies with debt and flipping them, so to speak?
It would be hard to stop the pensions because they view themselves as sovereign entities. This is a states' rights thing. This is why we had the Revolutionary War. And if they tried to regulate the public pensions, that battle would go all the way to the Supreme Court and would probably last 2 or 3 presidential cycles before it was decided.
Well, you know, you bring up the battle over public pensions, and there's probably going to be a very different one taking shape if they can't make their returns. We've had people say, look, in Elizabeth Warren presidency, the stock market would drop such and such. A pension fund would underperform as well. You know, if they were told not to invest in private equity, that would hurt their returns. Is there a reckoning coming for these major public pension funds who have everybody's retirement dollars in them and can't deliver on those promises if the market returns aren't there?
There will be a day of reckoning, but it won't be because of regulations or because the stock market goes down. They would view a decline in stock prices as a buying opportunity, and the ensuing LBOs would probably get stock prices right back up, artificially through shadow banking, but it would get them up nonetheless. They would have a day of reckoning when there's a credit crisis, and there will be a credit crisis at some point. Every credit boom has always been followed by a credit crisis, but that starts with a run on the shadow banking system. That starts when people want to take money out of these shadow banking entities and put them back into cash. That's when it starts. That probably doesn't happen for 3 to 5 years. Right.
You've been more bullish on the length of this cycle than most and correct on that. So is there anything that can be done now to prevent that crisis from happening?
Nothing, probably, because, again, the driver of this is our public pensions. They're the ones who put this money to work in the credit market through credit funds. They need to make 7.5%, which is an insane number, but that's how much they've underfunded their pensions by. So they have to take every new tax dollar that comes into our pension system and invest it as aggressively as ever. And again, they feel they are free from federal regulation because they are state entities, and so they're virtually unregulated in terms of what they can do and how aggressively they can invest. And that's why we have these boom and bust cycles that have been ongoing since the 1990s.
All right, and we're in the middle of one once again. Brian, thank you so much for joining me today.
Thank you.
Brian Reynolds with a deeper look at our financial system. Another day, another WeWork disappointment, and this time it's the employees getting hit while co-founder Adam Neumann stands to benefit. We'll have all the details next.
Hiring is challenging, especially for a pivotal role.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera.
You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Carl's All Change Casserole. So, Chloe walks in from school. Tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat. But not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch. A dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
It's Liz Hernandez with your TuneIn Music News Update. Shawn Mendes tells GQ magazine that he has one style icon. He says, James Dean. He just naturally kind of became someone I really looked up to, I guess. I mean, that's what I'm also trying with my hair. Meanwhile, Shawn's girlfriend Camila Cabello tells Teen Vogue magazine that she wants to keep her relationship private. She says, I've learned that I don't want to be as open or public about relationships anymore. To hear music from Shawn Mendes and Camila Cabello, search today's hits on TuneIn.
From the TuneIn Studios, I'm Fonseca with your latest sports update. Well, the World Series will be continuing this Friday. 8:07 p.m. is at first pitch right here on TuneIn. Astros-Nationals, Game 3.
Our mindset has always been to win today's games. We're not thinking about winning the World Series today. We're thinking about winning Game 1. That mentality, since we've had it since day one, will feel no different today once the game starts. But
yep, follow it right here on TuneIn. Friday, we've got the World Series continuing. That's your TuneIn Sports Update.
Welcome back to the exchange. It's not just layoffs that WeWork employees have to worry about. Their stock options are now underwater. They had been above $20 a share since January of 2016, but now sit just over $19 a share, meaning any options after that date wouldn't have any value if they were exercised now. And while some employees may now be out tens or hundreds of thousands of dollars as a result, former CEO Adam Neumann is getting that payout of up to $1.7 billion, including a $185 million consulting deal. The new executive chairman, Marcelo Claure, defended that decision and also had a warning for Silicon Valley, saying, quote, the world has changed. Growth stories don't sell anymore. Well, if you've ever wanted to get Botox and get that stroller cleaned while you shop, now is your chance. Nordstrom is opening its new flagship store in New York City today, aimed specifically at women. We'll go inside it next. Then coming up on Power Lunch, the CEO of Group 1 Automotive will join in an exclusive interview to talk about the company's earnings beat and the state of the auto industry right now. Don't miss it.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Here at LNER, we love giving you more value. And we all love more, don't we? More sleep, more sun, more me time. So we've added our new Azuma trains with more seats and more great value fares. In fact, there are 3,773 more £29 single tickets every week on our Azuma trains between London and Leeds. Brilliant. Book direct to lner.co.uk. Launching alongside existing LNER trains.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3 for 2 it. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd. See DIY.com.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending. Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
After 7 years of planning, Nordstrom opened a new flagship store this morning, but a lot has changed in the industry since construction began. Courtney Reagan is in New York City with more for us. Court?
Hey, Kelly, this store was north of $500 million worth of investment. They say it's a $700 million addressable market, but still, biggest investment Nordstrom has ever made. It does expect it'll add about 100 basis points to top-line growth in the second half of the year, and the company could use it. They set out for a total goal of $18 billion in revenue by 2020. Last year, though, they were just sitting at 15.5, and sales were down about 6% in their full-line department store business for the first half of the year. Now, we know that New York is already Nordstrom's biggest online market, and they didn't even have a store here. But we also know that things have changed an awful lot, both here in New York and the retail landscape and industry-wide, since the planning for the store has begun. Neiman Marcus opened its first New York store. Lord & Taylor closed its flagship. Saks underwent a $250 million renovation at its store, but it also closed its downtown women's store, and Lord & Taylor closed its flagship operation as well. Now, analysts so far have been impressed with what they've seen here at 7 stores, 320 square feet. There are services like 24/7 order pickup, Botox. You can get hair blowouts, tanning, and so many more things. There's a pop-up area where online brands can come and display their merchandise, and that will be constantly changing. But still, there's obviously broader concern about what's going on in the department store sector, as some analysts have observed some pretty sluggish trends already into the third quarter. Back over to you.
Yeah, and it looks super busy there, Court. Stick around. I mean, Jan, for more, I'm joined by Jan Niffen. He's CEO of J. Rogers Niffen WWE and a CNBC contributor. I mean, you'd hope it'd be busy on day one, but does anything about this to you say this is the future of retail?
Well, I won't say that I think that store is the future of retail, but I will say I think that store is going to do fabulously well.